Hey, good morning and welcome to the live stream. It is Friday, November 28th. This is Black Friday, an unofficial holiday where people go out and take advantage of some really good retail deals. And I'm not a big shopper, so I'm going to sit this one out and let other people go shop, but I am a big stock investor. And I'm going to take a look at the market and see what is going on with the stock market, see if there's a good opportunity to pick up some shares in stocks that I really like. Looks like the market is trading higher as we open. The Dow is up 0.17, S&P 0.16, NASDAQ is up nicely. And the crypto space is picking up a nice bid. It had been selling off for a couple of weeks, and it really put a lot of pressure on the Bitcoin, and it put a lot of pressure on stocks that trade crypto, for example, Robinhood or Coinbase. Now, the markets had a terrific week, Monday, Tuesday, Wednesday, really good days, man. I think if I read the charts right, from October 28th until roughly a week ago, we were down about 5%, a little over 5% on the S&P. But this week alone, the market's gone up 4% on the S&P. So this market doesn't like to sell off. It likes to go up. It doesn't like to go down. If it goes down, it doesn't stay down for long, which has been interesting. So this live stream, I'm going to try to go a little long today. I've got the day free, and I wanted to cover stocks, cover topics that you guys would like me to talk about. If you're a member, like our newest member, signed up early today, thank you so much for becoming a member. Tell me if there's a stock. If you're a member, tell me if there's a stock that you'd like me to take a look at. We're going to take our time and take a look at the stock, look at the fundamentals, see if the business is a strong business that has potentially a really good discount on the stock based on the net present value of its future cash flows, net present value of its future profits. Let me know. If you're not a member, no big deal. You can buy a super chat and we can get you set up, and we can review a stock that you want if you buy a $5 super chat or you become a member. It's on the chat. This message is on the chat. You can click that link and you can become a member. But in any event, I appreciate you joining and sharing your morning with me. Mike, Qfin, and Nice. Let's take a look at Qfin and Nice Software. We will take a look at those. Good to see you, Mike. I hope you're having a good morning. Today's market's going to be open for half a day. It's going to close at either 1, I think it's at 1 Eastern, or it might be noon Eastern. So shortened trading session here. Better get that right so I can get my trades in appropriately. But it's going to be a shortened day. Today's going to be a shortened day. Today is the last day of trading for the month of November. And then we move to the final month. 1 EST. Thank you, sir. Yeah, so we've got about 3.5 hours to work with, and we'll see what we can do in that time. That's enough time. I don't need a whole trading day to put in my trades. All right, so looking at the heat map for today, we've got, man, Google going higher. Man, Google's gotten a lot of attention, and I think they deserve it. They were getting a lot of negative attention, negative stories, starting like a year ago that, Google's not going to be able to compete in the new AI space. And I think they did what they should do, which is they got to work. They didn't say much, but they did a lot. And now a lot of people are thinking Google is probably the strongest AI play out there that has a lot of longevity. you can invest in Google and see it work for the next 5 years. Where if you look at other investments that are in the AI space, they're flourishing, but I don't know that they're going to be doing all that great in a year and a half, 2 years. But Google, I think, is a really good long-term idea. It is the biggest stock in my portfolio. I'm glad that I covered it. I'm glad that I was communicating that I thought it was a great opportunity 6-7 months ago, and I wrote it up. I've bought in shares as recently as last week. So I'm a big Google investor. Happy to be there. Our friends over at NVIDIA are giving up a little bit of their market cap, but it's no big deal. They are doing so well. Broadcom keeps going higher, and it's pretty incredible what they're doing or what the stock price is doing. The software space is picking up a bid. We'll see if that's helping nice software go up a little bit. The financial space, I see some green out there. JP Morgan is up. That looks good. There's some pretty good green out there. Within consumer discretionary, and Amazon is bidding higher. Today, I'm sure, is one of Amazon's biggest revenue days. It's Black Friday. They probably will set another record. Tesla going higher. And when we move into industrials, not much going on there. Looks like healthcare is taking the day off. A lot of red here. A couple of little green spots, but mostly red. So I think healthcare is giving up some of the gains they've been seeing over the last couple of weeks. They have been, especially Eli Lilly, has been doing really well. So they're giving up some of those gains. Energy is picking up a little bit. I saw that oil prices were a little higher, so that's helping them out. So today there's going to be a football game, and it's going to be televised on Amazon Prime. So I think it's at 3 p.m. Eastern. And I forgot who was going to play, but there'll be a football game today. It looks like United Healthcare is up, and Oscar's coming back to earth because it went up so much over the last 2 trading days. In fact, I wanted to take a look at the heat map for the 1 week. It's interesting to see what's been happening. Google has been on its tear. Look at that Meta stock, right? Meta, the market just telegraphs great opportunities, and Meta's one of them. It pulled back from its earnings. Its earnings were like October 28th or so, and it really sold off. But the market tends to do that with Meta. It has like a kind of a volatile relationship with Meta. And it sets up the stock for those who are paying attention to buy into it and then really make money, which I did. So that was good to see. Tesla's up almost 10%. Amazon's been in a rally mode. Look at Broadcom, 15.6%. Incredible. Looks like the semiconductor space has been doing well. Healthcare had a decent 1 week. So the one thing that I think is healthy is I've noticed that there's been some rotation, not like everybody's getting out of semiconductor and moving over to healthcare as an example. No, but it's been a little bit, it's been healthy. And I wanted to show this here, which is the performance based on sectors. And these are the big sectors: healthcare, financials, technology, industrials, and so forth. And for sure, technology has been the star of the show for the last 5 years, up 401% for the whole sector. No big surprise. That's where NVIDIA operates. That's where Broadcom operates and other high flyers. The number 2 space is where Google and Meta operate. Communication services. Energy is 153. And I think it's the compare, because back in the COVID days, energy was really priced low. So I'm completely agreeing with communication services being in second. Industrial is 140. But let's kind of come into the year to date and then the monthly. So over the last month, healthcare has performed well, up 9.76%. Communication services, there's Google again, performed 8.48. So these two have been performing well for the last month. And I think this one's got more to go. I think healthcare has been so beaten down. There's some good opportunity there. Technology did give up some of its big gains. And that's what I'm talking about, this small rotation of maybe some capital leaving technology, moving over to healthcare, moving over to Google, and that kind of thing. And other notables, nothing else big to report. I guess materials has caught a nice little bit over the last month. Now we look at year to date, it looks like, boy, a lot of sectors have been doing well. Healthcare has been doing well. Financials, technology, industrials, materials. Wow, look at that. I know gold has really worked this year, as well as other commodities like copper. Communication services done really well, and utilities have done well. So you're seeing that rotation. We'll see if it continues from one sector to another. This sector here is massive. It doesn't have it on here, but if you measure the market cap value of these sectors, technology is huge now. It's a big part of the S&P. And when you look at healthcare, it's become smaller, much smaller. And so has like the software space. A lot of money is leaving software and going into the data center. All right, so I wanted to, let me take a look at the market one last time. I'm going to check the chat, see what we've got going. Looks like some other people are putting some messages down. So we're still in an up market. Looks good. Looks good. And let's get back to the 1 day. Keep an eye on the 1 day. What I aim to do is I'm going to let the market trade for maybe an hour and a half, 2 hours. Then I'm going to put my trades in. Got a list of stocks that I would like to buy. We'll see what the market's doing today. All right. So it looks like things are settling down. The sell-off in NVIDIA is getting a little more extreme. Apple's down a little bit. All right. So let's check in on the chat here. Yeah, you know, the Cowboys winning yesterday, that was impressive. And the Cowboys 2 weeks in a row have come from behind and have dealt with very good opponents. Those Cowboys, look out. They could upset some people in the playoffs. I think they're headed to the playoffs. Good to see you, Mark. And Qfin's been selling off for a while. Okay, we're going to take a look at that one. That'll be the first one up to the plate. Dave is up. You know, Dave is, we've talked about Dave on the last couple of streams. I like what I'm seeing. I really do like what I'm seeing. If that establishes an upward trend, I would like to buy some Dave stock. I don't own any Dave stock right now. So we're going to take a look at Dave. Good to see you, David. You are a regular. Good to see you. I agree with your statement. Absolutely. All right. So caught up on the chat. Thanks, everybody. Let's get into a particular company stock and see what we've got going. Qfin. So Qfin Holdings, Inc., together with its subsidiaries, operate an AI-driven credit tech platform under the Qfu something brand in China. Okay. So this is, you know, I'm in the U.S., so just kind of stating it as, you know, a U.S. investor, you know, thought process. It's in China, so that's a risk factor. I own Chinese stocks, not afraid of them, but it's just one risk factor. Second is a small cap. And that combination really compounds the risk. Like, okay, it's in China, the market's going to discount it. It's a small cap, it's going to really discount it. It's not a really well-known name. Okay, so you're going to deal with a stock that may be operating quite successfully from a business operation standpoint. But the market may be just like, hey, I don't know this stock. I'm not going to put any capital into it. And that seems to be the case here. It's down 48.8%. There's some good known names in China, right? Like Alibaba being a very well-known name. C Limited is not in China. They're in Singapore, but they do a lot of business in Asia. So I'll kind of put them in the mix. There's some others. These guys, 2.5 billion. It's like 1-to-1 sales to market cap. And the P ratio is incredibly low, and they pay very high dividend because the stock's been selling off. When we look at their financials, let's take a look at their revenue growth. Now, the revenue growth full year is showing me problems. They didn't grow in 22. They didn't grow in 23. Slow growth in 24. We look at the quarterly, very good growth. That looks good. And that looks good. Now, this is in the Chinese currency, the yuan. So when we look at this number for the quarter, 5.2, we'd have to multiply it times 0.14. And that's going to give us a number of about, let's call it 75 million in revenue. All right. So 750 million in revenue. So that's it's a small company, but they're getting bigger. And the reason I state that is when you look at a revenue growth number, if you have a gigantic company like Amazon that's like almost 700 billion in revenue and they grow by like 13%, that's incredible. Where if you have a small company like Qfin and they grow by 19%, not incredible because they're small. It's easier to grow when you're a small business. All right, so we've got that squared away. They are growing. Good to see that. In the trailing 12 months, are growing 14%. Free cash flow, again, 0.14. And that gets us about, call it 150, 160 million dollars of free cash flow. Gross margins look good. And profit looks really good. So these metrics look good. Very prosperous, profitable business. I imagine they don't have a whole lot of debt, but let's take a peek just to be sure. And they don't. They have more cash than they have debt. And within stock analysis, once you get into the statistics tab, stock analysis converts a foreign currency to US dollars to give us these metrics. So it's kind of a cheat code on how to get to free cash flow in US dollars. Here's the free cash flow, 1.53 billion in free cash flow over the trailing 12 months. That's a pretty solid free cash flow number. Keep in mind, this is a $2.5 billion market cap. So you're getting like, geez, what is that about? 66% or so of the company's market cap in cash flow. That's incredibly high. That's really impressive. Two analysts cover it, and they don't agree on this stock. One of them thinks it's worth $21. The other one believes it's worth 52. The fundamentals, if this company was headquartered in the US, it'd be priced at 52. But it's in China. So we recognize that, hey, stocks that are located in China are going to get this additional discount. So just being realistic, it won't be priced at its natural value. And together, they think it's highly discounted. We have a good number of analysts putting in their research to establish a forecast on revenue. And their revenue is not growing super fast. It's growing at a good single-digit number, but they're not big, right? This is in the Chinese currency. So they're not incredibly big. They're just good size, but their profits are going to expand and their P ratio is super low. These guys are making money. They definitely are. but they're just not catching the investors' attention. Investors are not buying into it. When will investors pay attention? I can't answer that. It's I don't have any investment in a small cap. Let me double check my position in Futu has been doing well, but it's, call it a small to medium sized cap. I've done well with this stock. And this one's easier for the investor to find because Futu provides brokerage services. So probably more investors are like very familiar with Futu, or I think one of the brands they have is Mumu here in the US, but over in China, they call it Futu Bull. So this one's a little easier for the general investing community to understand that, hey, Futu is a stock, they're doing well, but Qfin, I don't think gets the type of attention, notoriety that would have it really go up. This stock for a little while did catch the investors' attention, and boy, look at that. Holy smokes. It went from 14 up to 40. That can definitely happen again. I don't know when. If I did, I'd probably buy $10,000 worth of Qfin so I could take the ride up, cash in that gain, and move on. So maybe that is part of my investing strategy. I'm not an investor in Qfin. I'm not planning to buy Qfin, but I would definitely think about my exit strategy on a stock like this because its track record has shown me that it could really rally higher and then give up those gains. So it might be a stock worth considering. Let's take a look at the valuation and see if it's a stock that is a good idea or a bad idea. Yeah, it's highly discounted. I mean, the cash flows are just incredible for this business. I think it's discounted by 90%. If you measure the value of those cash flows, and if they are producing those cash flows, this is a pretty good idea. I think it's a good idea because you're getting a dividend, so you're getting income. If the market starts paying attention with this stock and it moves it up 50%, you won two ways. So I would entertain buying Qfin, but I would really think about my exit strategy on the way up, right? I wouldn't get greedy and say, oh yeah, I'm going to ride this thing till it's a 3-bagger or a 5-bagger, because you may be sitting on a nice 100% gain for a month. And the next thing you know, it goes down 70% because that's what the stock's done. So it'd be a pretty good idea. But you have to have an exit strategy. So that is Qfin. And it's incredible to see some of these businesses. You see businesses that are so well discounted like this. Then you look at a business where the fundamentals are terrible, like Tesla, but the public loves it. So it just keeps going higher. And you're like, whoa, okay. That's kind of like the opposite, which is the market really loves that stock, even though the fundamentals are not very good. Here, the fundamentals are fabulous, but the market's not paying attention. So thanks for asking about Qfin. It's a nice reminder. I might put a nice little position into Qfin just to play the game, because if it goes up, it's going to go up fast. All right, so that's Qfin. Covered Qfin. Now let's talk about NICE. And NICE is a software company. And it's a software company that is in the CRM space, the customer experience space. And this stock, along with a lot of other software companies, has been sold off. Now, software is a terrific industry. And I say that because the software industry has proven over the last 4 decades, 5 decades, that they produce very high margins, very high free cash flows. They tend to have very sticky, loyal customers if for the good software companies. They have a lot of attributes that are very desirable, which is why some of these software companies have created some of the wealthiest people around. But nice software has been selling off again with CRM, Salesforce, and ServiceNow, and other software players like Adobe. The fundamentals are going to look good, but again, we're going to end up where we're like, okay, when's the market going to start buying software stocks? I can't answer that question, but I could tell you I'm ready. When it starts to buy software stocks, I already own some software stocks, but I'm going to really load up as soon as I see a rally, a trend, and I see a trend to the upside. I'm going to be putting more capital into software. Nice Software is a company, I believe they're headquartered in Israel. And let me double check that. Yep, located in Israel. They do customer experience. They do CRM, and they have a piece of software that enables companies to use agentic AI or build agentic AI processes where the software or the AI platform is doing tasks for the business, maybe answering customer questions, moving maybe a process along, completing a administrative task and that kind of thing. So they're in that game. And if AI is going to be this big benefit to businesses and society and all that good stuff, which I think it can, businesses like NICE, Salesforce, ServiceNow are going to benefit. They're going to benefit because businesses are going to say, I want to buy nice software, build agentic AI processes, and it's going to lower my cost of doing business. It's going to accelerate my business because things are getting done faster. So all those things are very positive for the space, but the market isn't viewing it that way. It's selling off these stocks, which has been surprising to me. But I'll be patient. I'll be like sitting, waiting for these stocks to begin to rally, and then I'll jump in. Let me show you some other things that prove that these businesses are discounted. PE ratio is really low, 12, 9. And the reason I say it's low is that Nice Software has been putting up good growth numbers. So these growth numbers are not going to break any records, but solid growth with a business that has terrific margins, 67. Now, I should back up on the term terrific. Good, not terrific, good. 67 is good. Terrific is 85. And they have good operating margin, good profit, free cash flow is very good. So you have good fundamentals. You have a growing business. Why is the stock price sold off? It's because the space, the market is like, well, we'd rather invest in a super simple story. Broadcom, they sell semiconductors. Semiconductors are needed by the data center. Yes, got it. But Broadcom has a PE ratio nearing 100. You're paying a lot for Broadcom. These guys have a PE ratio at around 10. So this is an opportunity for the value-oriented investor that's paying attention. We look at a forecast. 13 analysts cover this stock. They are concluding this is a highly discounted stock. Okay, I agree. And they conclude, 13 analysts are putting in their research. This company is going to keep growing. They're going to be bigger in size. Customers like their software. More customers are coming to them. Existing customers are buying more products. And their profits are going to expand. Their PE ratio is going to be single digit PE for a software company that is growing, good margins, good profits, great cash flow. It's an opportunity. If you show me these fundamentals, I conclude with these fundamentals look really good. You could remove the label of the company name and the industry, and I'd be like, those fundamentals look good. I believe their balance sheet is fine. Let's take a peek just to be sure. And it more certainly is, because they have $455 million of cash and only $86 million of debt. Overall, nice, as well as other software companies, are an opportunity. And let me take a look at my valuation of nice software. I'm right there with the analysts. I think it's highly discounted. Now, I don't own NICE because the opportunity to buy the biggest player in the space, which is Salesforce, is also there. And Salesforce is highly discounted. The market's going to buy Salesforce first. It's a really well-known company. It's got a market cap above $200 billion. That's how I'm playing it. Now, if the space starts to rally, you better believe I'm going to probably want to throw a lot of capital into software and maybe even include NICE software in that investment. But for now, I'm going to stick with CRM. I just point to the fact that software stocks right now are really discounted. And when the market starts to rally, they could really have a really good long-term appreciation trend because they've been discounted for a while and the fundamentals are there. So that is NICE software. All right. So we covered Qfin. We covered NICE software. Let me take a look at the chat, and then we're going to move over to Dave. So you guys are talking about silver. Good luck with that. I'm not a big gold or silver investor. The closest I get is miners of copper. And I own Bitcoin, which is a different way of investing in a hedge asset class that's done really well. Well, good luck with Qfin, Mike. I hope the market ends up acknowledging that that's a really discounted business. Yeah, it looks like you've got your exit strategy ironed out. Good thing, good deal. Man, I don't get why the market's just not buying software stocks. If the AI story is that we're going to see a big advancement in efficiency and productivity, it's going to happen through software. It's going to happen through, like when we use Gemini or ChatGPT, that in my mind is a piece of software running on an AI platform, accessing these AI models. So taking that type of feature and putting it into software can really unlock a lot of value. But you're going to need platform players like NICE, CRM, ServiceNow, Adobe, enable that unlocking, because right now businesses use these software platforms to run their businesses. Also, Intuit is going to use a lot of AI for tax season. They have a partnership with OpenAI now. That's going to be interesting to see. So we'll see how that part of the market operates for the next year. I think software stocks are a good asset or industry to pay attention to in 2026. If it starts to work, I'm going in big. All right, let's talk a little Dave. So Dave is a new school financial services company. It really went up fast, and then it kind of has lingered around these price levels, kind of just consolidating and not really showing that it's going to go higher from here. And we looked at Dave recently, right? It's having a good day today. The 5-day, terrific, 22%. Man. Over the 1 month, though, it's down. You could see where we started to sell off. October 29th, stock was at 243. We had a pretty good sell-off, and now this thing's beginning to recover. Not a bad time to look at it. It's beginning to establish an upward trend. Looks good. This stock is priced quite well. And I mean that it's not overpriced. The PE ratio is 21.7 for the current year, but we're moving into 2026 fairly soon. The PE is going to be 19.7. And analysts believe there is a discount. The growth on this company has been really good. And the only caveat that I would put there, analysts think there's a good discount there, is we got to look at these outer years. If growth begins to really slow down, like in 2026, it's expected their growth is going to be 15%, which is decent, but they are a small company. So for a small company, this is not great. This is not impressive. They've got to grow faster. You're little. Go find more customers. You've got plenty of addressable market to go after. So it'd be good to see them grow faster. And their profits are expanding nicely. But this is, I think, what the market's worried about. If these guys become a slow grower, the stock's not going to work, because there's giant companies in financial services. They're giant machines that will eat up market share and keep Dave kind of limited to a particular market cap. So I still think Dave is very investable, because I think there's plenty there to appreciate. And especially if we have a really low interest rate environment, which I think we're going to have, we might even get a rate cut as early as December. And in 2026, I'm expecting more rate cuts. Low interest rate environment equals good times for Dave. So it would be a good idea going forward. I've done evaluation. I've completed evaluation for Dave. And I have a really nice discount on the stock because it's just growing so well. I'm going to bring back the growth a little bit, and even bringing back the growth. It's really nicely discounted. So these small caps, small caps are really interesting. They could be really fun when they go up, but man, they could just break your heart when they go down, because they have great fundamentals, but they still sell off. Like Dave just sold off. So I'm careful with small caps. I don't want to have 80% of my portfolio on small caps, because man, I'll have some really tough days, weeks, and months if I'm all in on small caps. So my conviction isn't incredibly high, but I'm interested. Maybe a small position into Dave, small position into Qfin. Those might be good ideas to try to establish my next big winner. We'll see how things play out. So that is Dave catching a nice bid. What's the market doing? What is it doing here? We have been open and trading for 38 minutes. Look at that. Google couldn't hang on to that rally, beginning to sell off. Now, if it is going to sell off, I'm going to buy. That is an automatic, because I think Google is on its way up. It's got everybody's attention. Warren Buffett's in it. A bunch of other super investors are in it that are doing terrific, like David Tepper is in Google. And I'm sure he's glad he's in it. Broadcom's still going higher. NVIDIA is down. Now, I caught a really good price on NVIDIA. Was it on this week? I think it was Monday or Tuesday. And I bought shares and I was up 6%, but now I'm probably going to be up only 4.5% on the shares that I bought. But I can't buy at the prices we're at right now. I'd have to wait for NVIDIA to come down quite a bit more, maybe another 3 to 4% more. And I don't think that's going to happen today. Microsoft is catching a bid. Amazon energy space is doing well. Looks good. All right. So let me catch up on the chat here. So you're looking at potentially selling EQT. All right. That's a very good question, which is, all right, do we ring the cash register? Or what am I going to do with EQT? This is not theoretical. I am an investor in EQT. I like EQT. It's been a good performing stock, especially buying it here. And the reason I like EQT is they are a natural gas play. Okay. And natural gas is going to be used to power the data center. So you see these data centers and they put a bunch of computers. In fact, the data center came up in the news because the Chicago Mercantile Exchange, the CME, couldn't open early this morning because it had some overheating at the data center. And they consume a lot of power, and the data centers are growing really fast. They're going to need a lot of natural gas, which is why I'm buying EQT. Now, yeah, we're sitting on gains, but do I think that there's more to go? Well, let's take a look at it. Before I move on, looks like last half. Thank you, man. Thank you very much. And looks like you're not even asking for a stock. I really appreciate that. If you would like me to talk about a topic, a stock, please put it in the chat, and I really appreciate it. Thank you. All right, so moving on EQT, this is a $37.7 billion market cap. PE ratios look okay. And forward PE here in 2026, 15.7, looks okay. Dividends low, 1%. And I still think there's a little discount left there. Now, one thing I'll point out, energy has not been working in general. If you look at Chevron, Occidental, for the 1 year, not working. But this one is because of natural gas. That said, when we look at, and I'm going to look at the forecast, we have 20 analysts putting in their research and establishing a price target. They think there's a small discount available. And we, excuse me, we have nice growth ahead. 2026, 16.5% growth, followed by single-digit growth. Profits are going to really expand, and the PE is going to move down. So this looks good. I like the big story, which is, yeah, they're going to have to burn a lot of natural gas if they're going to want to power up all those GPUs that NVIDIA is selling, power up all those chips, and power up all those data centers. You're going to have to burn a lot of natural gas. And these guys are selling their natural gas into the data center complex. So I like that story. Now let's take a look at the fundamentals and see if I'm overpaying for EQT or if I'm still seeing that I've got more to go. And I've got more to go. I've got a 14% discount on EQT. I use a higher discount rate, by the way. I'm not using a 7.5 because I'm taking a bigger risk. What if this is a smaller company, something bad happens? Okay, so I want to be compensated for the additional risk I'm taking on a smaller company. So I'm hanging in there, Mike. It's good to have a gain. It's good to have a gain on a stock. That's what we do. That is what we're trying to do. But I think there's more to go. And I'd like to continue on, especially, okay, one thing we haven't considered is, what if there's a shortage of natural gas and all of a sudden natural gas prices pop 30%? EQT is going to be making money left and right. So that could happen, and I'd like to be sure to stick around for that. So right now I own EQT, I own Chevron, and I own Oxy, holding my positions at Exxon and Exxon, I think I said Chevron and Oxy. I'm holding my positions on Chevron and Occidental, and I was buying into EQT. The market does me a favor and makes it harder on me at the same time, because yeah, I started buying here. It looked like a good opportunity. It started to rally higher. I was able to buy more shares. But then after that, it's like, well, the market's doing the work for me. The value of my position in EQT is going up just because the stock price has been going up. So I could respect you taking the profits on that, Mike. Totally. It's your style, right? So if your style is bank it, go for it. I'm going to stick around a little longer on this one. And good luck with your decision. And I'm glad you brought it up. All right, so let's keep rolling here. All right, so Shadow Guy, you just got to work in the cold, man. Did you ride your bike or subway or? Yeah, glad you made it. Wow, Black Friday around the world. All right, another super chat. Amandio Marquez, thank you. You want to look at FINV? Let's look at it. Thank you so much. Appreciate it. And before we go into FINV, totally understand your point on EQT. Got it. All right. So that's it. I mean, you're making money on EQT. Nothing wrong with making money. I think that doesn't break any rule. All right. Let's keep rocking here. VG. What is VG? I'll look at that later. All right. So let me get into FINV. FINV, I believe, is another stock in Asia. Or no, this one is down in Brazil, I think. No, China. FinVolution is an investment holding company, operates in the online consumer finance industry in China, Indonesia, internationally. So I'm going to open their website just to get re-familiar with what they do. So they use a lot of technology. Looks like they operate a payment platform. Okay. So they're like a fintech. Credit services. Okay. It is a very small cap. And it's interesting that we looked at Qfin earlier in the stream, and now we're looking at FINV. The revenue exceeds their market cap, really low PE, similar to Qfin, really highly discounted, according to analysts. It is sold off. And you see that the market will rally on this stock. It'll get investor attention, rally high, but it looked like it hit a 52-week high on July 7th of 2025, and it's gone down about 50% since then. So you see how violent this is. Hey, thanks, Mike. I appreciate the super sticker. Thank you very much. So you see that these stocks, these small caps, again, they are so fun and interesting to find them when they're really good businesses. They're priced really well as an investment. They go up, you got that pride of, man, I found this thing. It's doing really well. And then bam, you get kind of dealt a blow like this of the stock going down 50%. But let's put that off to the side and see if this is a good business to really consider. Now, the full year growth is not that great. Now, when we look at the trailing 12 months, better. The revenues are represented in the Chinese yuan. So I think that when we multiply this by 14.14, we're going to end up with about $1.6 billion, $1.7 billion in annual revenue. So not the biggest company we're going to see today. Gross profits are very good. So they're using a lot of technology to run their business, so they make good money. Gross margins are very good profits. So this business is solid. This business is attractive, very good margins. And when we look at a forecast, we've got two analysts, probably the same two that were covering Qfin earlier. and they think highly discounted. Out of curiosity, let me see what these analysts. So we got, they don't have a lot of credibility. So these are kind of new analysts. So the PE ratio is super low. They're going to continue to grow. That looks good. Now, one thing to consider both for Qfin and FinV, the economy in China is growing. I know that they had lack of growth 2022, 2023, because China dealt with COVID by shutting down factories, shutting down operations, and that kept their economy back. It held it back. It slowed things down. Those days are over. We don't have COVID anymore. We don't have a big giant pandemic. So the Chinese economy is growing and it's beginning to boom. Well, I think the Chinese consumer is going to start buying more product. I'm also seeing China produce some products that are pretty interesting. And again, those products are going to need financing, cars, more technology. Like you have the Meta AI glasses. Our friends over at Alibaba are putting out their version of it, or their competitive product. So I think a lot of people are going to be buying stuff in China and probably needing more financial services, probably buying more real estate and so forth. So I think the space looks really good for these two companies, FinV and Qfin. Qfin financials look terrific, look so darn discounted. When is the market going to pay any attention to these stocks? So let's take a look at the fundamentals. So FinVolution fundamentals look good from high level, but let me look at the valuation. And I have a huge discount on FinVolution, 81%. It's not a, is the stock discounted or not? It's discounted for sure. If they operate the business for the next 5 years the way they've been operating it, there's no way around it. They're going to be worth more. The value, when you weigh the value of the business, looks great. When's the market going to buy them? So, this is never investment advice, never advice on what you should buy or sell. But I'd like to share with you how I would play this and how I intend on playing on this. So I own a couple stocks and one ETF in China. I own Alibaba, Futu. I own C Limited, which is officially headquartered in Singapore, but does a lot of business in China. And I own an ETF. And that ETF is primarily invested in the bigger caps in China. If I see this space rally, I would jump in. That's how I would play it. And I would establish an exit strategy. Maybe, and I wouldn't get greedy. I would probably put my exit 30 to 40%. Once I hit a 30 to 40% gain, I'm out. But most definitely, FinVolution and Qfin are discounted by big amounts. So interesting stocks, and this is a good idea to be looking at because we have had such a great, time in investing in technology that these stocks are really expensive. The overall PE ratio for that whole sector, 41. Qfin and FinV have P ratios of 3. It's like, holy smokes, that's really low. It's in China, I know, but it's still really low PE. If they perform the way they've been performing, these stocks are just worth a lot more. So I think it's a good idea to be looking at these Chinese stocks. If you are not afraid of additional risk, it's not a bad idea to buy into these small caps. So that's where I'm at with FinVolution and Qfin, two really interesting stocks. All right, so we've got some really good stocks coming up. Thanks, everybody. And looks like Shadow Guy. Oh, you guys don't have subways where you live. Okay. E-bike today in the cold. Go Shadow Guy. Thanks again, Mike. Really appreciate you. Thank you so much. And thanks for all your involvement, both on the streams and on the Discord. It's great to have you in the community. You bring a lot of value. I appreciate that. Thank you. Yeah, so I think when they start to work, they're going to work fast. I think since there's small caps, both FinV and Qfin, when they move up, they're going to move up fast because there's not a lot of shares out there. And as soon as any investor has significance buys into the stock, look out, it's going to really work. So thanks for asking about FinVolution and Qfin. So it looks like you're Benton. Good to see you. You're holding YMM. I'm not familiar with that one. Full Truck Alliance. So these guys do a freight platform. Cool. Technology in China. There's a lot of trucking in China. So okay. So $11.7 billion market cap. They are technology, right? Yeah. Software application. Revenues, 1.75 billion. So you're paying 10 times revenue, maybe 9 times revenue. And P ratio looks sensible. The dividend looks okay. Small discount. This one's not been selling off like other Chinese stocks. And some Chinese stocks are flourishing, like Alibaba's doing great, Futu's doing great. And the 1 year looks good. 5 year, not good, but depending on when you bought, I mean, you're doing well. If you bought back here, you're doing great. These guys are growing nicely, quite nicely. 19% in the trailing 12 months. So it looks good. So they're not showing me free cash flow figures there. Gross margins look great. 88.65. Profit margin 31.9 looks great. Real good. And we've got 3 analysts covering this stock. The one thing is they do have price targets that are near each other. And we look at the forecast, 15 analysts are putting their research into the forecast. Their growth is going to be single digits, 7%, but then it's going to increase in 2027. This is a good idea stock because, again, back to the Chinese economy is growing and they're going to be more trucking going on is my expectation. So, and look at their profitability, really expanding, bringing down their PE ratio. It's a good idea. It looks like the market is aware of this stock based on the performance of the stock in the 1 year. It's not been selling off. It's been getting investment from some investors. The market cap's also a pretty decent market cap at 12 billion. I wanted to see if I'm going to get some free cash flow here. Nope, they're not giving me any cash flow there. So let me take a look at their investor page, see if I can get some free cash flow out of their investor page, and I could see if this stock is priced well. So here's their last earnings. I think it was November 17th. And hopefully, yep, here's the balance sheet. Okay. And here's their income statement. Nope, didn't get a free cash flow statement. So I'm not able to give you kind of a sense on the valuation. It looks like a good business. And it's probably, judging from their profitability, they're probably going to price with a small discount or so. It's not going to be as wild discount like FINV or Qfin, but it looks like a really good idea because it's a technology play with very high margins in a particular part of their economy that should see a lot of growth. With the Chinese economy doing well, these guys are going to get more and more volumes headed their way. So good idea. Good idea on China investing in WMM. Good to see you, Benton. Magical Self. What's my comments on valuation of Airbnb? Airbnb is discounted nicely. The stock after their earnings, November 6th, has been having a decent run recently, like from the 20th, which would have been end of last week. It's had a nice little rise. The stock has a P ratio in 26 of 2026 of 25, and their growth. So the full year 12% for 2024. But let's take a look at the trailing 12 months, 10%. So that's good growth. They're becoming a pretty good sized company, almost 12 billion in revenue. So that's pretty good growth. And I do like their profitability and their free cash flow generation. Their gross margin's 83%, real good. Profit margin's real good. Free cash flow yield, excellent. So these numbers look really good. Looking at, so those numbers look good. Let's take a look at what analysts are saying about this stock. We've got 21 analysts covering it. They think 23% discount. And we have some analysts that are pretty high on the number. Now, economy-wise, I think the economy's okay. I know that we have some job losses to deal with, but I don't know that we're going to have a recession anytime soon. And I think Airbnb is going to continue to grow. So their growth is expected 10%, 11% in the future. 2026, 9.4. Profits are going to expand nicely, bring down their PE ratio. So that looks good. And when I look at Airbnb, Airbnb is a stock that I've started to accumulate again. I did sell some of my shares because I was a little worried about it, but now I believe that they're discounted by 39%. Really nice discount because they're just really profitable and they generate a lot of cash. They're going to have that steady growth rate. If they could get bigger, that'd be wonderful. I think they should acquire another business. They carry a lot of cash on the balance sheet, almost $12 billion of cash, and they have $2 billion of debt. So that's a lot of cash. They can do something with it. They can buy back shares. They could acquire another business. Maybe they could acquire Lyft. That'd be a good idea. Or something else that would make sense in their category and make themselves bigger. If they make themselves bigger and a bigger brand, then we've got something. But we'll see what they do. It's still founder-led, which is good. The guy should continue to be an entrepreneur and make Airbnb bigger and more valuable. And that is Airbnb, highly discounted stock. I continue to accumulate shares. All right, so that was Airbnb. Hey, Mark, I do not own TIGR. I believe is that in China? Oh, fintech. Okay, so this is similar to Futu. Wow, it's doing well. Yep, looks good. Smaller than Futu. Futu is bigger. All right, eToro keeps moving higher. Keep going, eToro. So Futu is similar to Up Fintech. It's bigger, $23.7 billion in market cap. It has been doing well, really well. So it's been a nice holding for me. I'm glad I own it. And it should continue to go higher. They make a lot of money. They make a lot of money on their trades. Good things happening. They do crypto now. So that's the playbook that these companies are using, similar to Robinhood. This one looks good. Let's take a look at their growth. Their growth looks good. They're a little smaller than Futu, but they continue to grow fast. Look at that. Impressive. Good operating margin, good profit margin. These guys are lesser known. They'd be riskier, but might have a better appreciation curve than Futu because they're not a known commodity, so they could really pop higher. But it is a small cap. This is a lot of investors are going to shy away from that. Like, whoa, I don't want to take that much risk because I'm already investing in China, and now I'm going to invest in a stock that is that small. That's big risk. But if you're a risk taker, this might really reward you. It really went up when Chinese stocks were flying up in 2021, but then it really crashed. It has been going up nicely. So Up Fintech, good idea. We're talking a lot of China today. That's great. I'm glad we are. Benton, ACR. Let me note that. Got ACR on the list. Shadow Guy. Chinese health stocks. ONC. I'll take a look at that. Shadow Guy. You want to look at SATS. Glad to. Innovent Bilogics. Oh, it's in Hong Kong. I don't know if I'm going to be able to, but I'm going to note it. And I don't invest directly into Hong Kong stocks. All right. Noted. Thank you for the idea. So Futu's down. Cool. Is the acquisition of Futu going to get done? So Airbnb is not a big position. It is my conviction isn't super high. The stock has underperformed. Let me search it up here. The stock has underperformed over the last couple of years. Here's Airbnb. It is, I don't think it's even 1%. So it's 0.63%. So less than 1%. So it's a small position. I don't want to take too much chances on that. So good question. All right. Mark, AMSC. AMSC. Got it. Yeah, Rivian. I don't like car companies a whole lot, but I haven't looked at Rivian in a long time. I see Rivians on the road, and they're unique cars. Their trucks look unique, cool, and they're SUVs as well. And DuPont got gutted, huh? I remember back in the day when DuPont was worth so much, and they're a materials company, just very famous materials company. All right, so let's check in on the market, see what it's doing. Kind of a lot of green. Financials, nice and green. We've got discretionary on Black Friday, decent. Amazon's up 1%. Energy's caught a nice bid. Staples, a little green. Meta keeps rising. Man, making money on Meta is an established good habit of mine. It was selling off and I was buying. And now that capital I put to work in the last 30 days is up nicely. The stock market makes it pretty clear. Meta's a very important company, growing at 26%. And I know that they spent too much on the data center. I acknowledge that, but I think they could correct that. The general business is super strong. So you keep doing what you do, Meta, and you keep rising. All right, that looks good. All right, so we have the NASDAQ up 0.3, the Russell up 0.49. We've been talking a lot of small caps, so they're doing well. The Dow is up 0.55. Looks good. Let's get back on our list of stocks. And next one up is ACR. So this is Acres Commercial Realty. This is a real estate investment trust focused on the origination, holding, and management of commercial real estate mortgage loans, equity investments, and so forth. So they're doing the lending, and this is a good idea because when we get into this low interest rate environment, there's going to be a lot of refinancing. These guys are probably going to see a lot of business, and maybe this stock's already gone up. Yeah, it's been catching a nice little rally, but with low interest rates, these guys should see good volumes of investors, existing property owners that come to these guys and redo their financing. So they're a very small cap, 146 million, revenue of 88.9 million. P ratio for 2026 is really high. Price target 16% discount. Okay, so I'm thinking these guys are originating the loans and probably just making money on them. Okay. So, yeah. So they're making money, good money. This year looks good. Let's look at the trailing 12 months. And I think these numbers are going to stay green for a while. You could see that it's already beginning to grow for them. So that looks good. And let's see if that translates into better cash flow and profit. So cash flow went a little negative. They may be having to temporarily put money into the business because they're growing. And they're making money. This is a good idea. You're catching this space when it's expected they're going to have better conditions to do more financing. So that's all good. Not a bad idea. Now, are they valued correctly? It's Let's take a look at the full annual and see if I could establish any kind of trend on free cash flow. So they don't have an upward trend, and that's because they're in an industry that is really dependent on interest rates. If you have really high interest rates, these guys are going to have a hard time generating more revenue and cash and so forth, because nobody wants to refinance, nobody wants to buy anything. We have lower interest rates, they're going to boom. So I would say they're probably going to do $50-60 million of free cash flow per year. They're going to have good growth. So I'd probably value the business at 10 to 15 times that number. So they'd be worth 500 to 750 million. Less debt. Let's see if they have debt on the balance sheet. They do have debt. But I'd have to study their balance sheet and see if they have debt, because temporarily they're holding loans on their books. And then you could pretty much accept that they have debt or justify having debt, because they could issue out a loan to somebody. They hold that loan for like 30 days and then they sell it to another company that just wants to hold the debt. That's what they tend to do. So here's the 10K. Take a look at their balance sheet, see what kind of debt level they have in proportion to cut. All right, so here are the loans. So this is what I wanted to see. So these are loans that they've made. And they're holding, and this was as of the last year, they're holding 1.5 billion. So that debt that I saw, and here's the debt level here. So they actually have loans that they're going to receive payment on that's higher than the debt that they have. So that debt's fine. It's almost like zero debt in my book. So that looks okay. So I think this business is worth 500 to 750 million. It's a tiny cap, but it's not a bad idea right now. This is not financial advice, but I'm seeing this is a good idea. It's going to have good conditions going forward. Things look good. Thanks for asking. That's a really small cap. I haven't looked at a small cap of that size in a long time. All right, so let's take a look at, I think it's either ONC or Innovent Bilogics. Shadow Guy, I think, asked about this. So B1 Medicines. So these guys are in Europe. Okay. 37.9 billion. Revenue 5 billion. P ratio is really high. They're growing really well. They make a lot of money. Gross profit 84%. They're not big enough to get that profit down to the bottom line, because they're probably doing a lot of R&D, paying all these professional scientists to work at their company. They don't produce free cash flow yet. So this one might be a little too, it's too early for my investing approach. I like to see cash flow, or I need to be able to forecast it. I'm not seeing that. But I think you switched that one to instead look at Innovent Bilogics. There it is. So Innovent Bilogics. So this is an HKD. That's the Hong Kong currency. .13. Okay. So 0.13, this would be Probably like 1.5 billion in revenue. Okay. Revenue growing really well. These guys are in Hong Kong, so they report semi-annually. Free cash flow looks good. This is all in the Hong Kong currency, but looks good. Very good margins. This looks really good. This is a growth stock in biotech in Hong Kong. And this is going to be in HKD. You got plenty of cash. Good idea. You can find a lot of good investments in biotech. As mentioned early in the stream, healthcare hasn't been in rally mode. It's actually been on the opposite end. It's been in sell-off mode. So you can find stocks like this. Now, this one's not my cup of tea because it's in Hong Kong. I am not a scientist. I'm not a life scientist. I'm not a biotech expert. I do invest in biotech, but it's in the US because I can understand their financials. I understand what they do high level. This one would be not in my sphere of knowledge, not in it far enough. I'd leave this one up for other people to invest in. But it looks like a positive investment. Really good revenue growth, profitability, high margins, cash flow, all the things are there for Innovent Bilogics. So I think somebody asked about SATS. SATS. EchoStar. EchoStar Corporation, together with its subs, provides networking technologies and services in the US and internationally. It operates through 4 segments: pay TV, retail wireless, 5G network deployment, broadband, satellite services. Okay. And where do they operate? So telecom services. Okay. Interesting. I haven't looked at this company, EchoStar. So they're in telecom. $20.7 billion market cap, revenue $15 billion. Forward P looks low, no dividend. So they've been contracting. Probably their old media properties are not keeping up with the streamers, and they're losing share to those streamers. That's what's happening there. And cash flow looks terrible. Man, they're losing money, huh? Yeah, fundamentals look pretty bad. 5 analysts cover it. The most concerned analyst has a price target of $28.91. And looking at their forecast, it's going to be slow growth with really rough numbers. This business, from their operations perspective, I don't think is where the value is. I think that EchoStar probably owns parts of the spectrum, and other businesses would be interested in buying it. That would be the play. Not my play. I would invest in it. This is not a good situation, but look at that. I think this is the one. I think they sold some of their spectrum to somebody else. So Carl Icahn is getting into EchoStar, huh? So EchoStar is buying into SpaceX. Interesting. So this is like the story behind it's getting interesting, but they do own like rights to operate satellites and so forth. And I don't know how that's going to work out for them. See, here it is. So they're selling spectrum, some of their spectrum to SpaceX. And I think that's what the market's excited about is, all right, cool. You're going to sell your assets to SpaceX. And it looks like they're going to load up on SpaceX as an investment. Good idea. But I think the gain is pretty much behind us. I don't think it's going to go up any higher from here. If it did, it'd be a surprise to me. It'd be a total like gamble. Are they going to go higher? Are they going to go lower? I don't know. I can't do it on fundamentals, so I'm out. Interesting stock, by the way. Thanks for bringing it up. AMSC. So American Superconductor Corporation, together with its subs, provides megawatt scale power resilient solutions worldwide. Looks like a company for the times. We need more power. These guys do so distributed generation solutions. So this is for utilities. Okay. Marine tech. FinTech. Interesting. It seems like a good business for the times. We need more power. And they are classified in industrials. Okay. I would have expected these guys would be doing better than this. For sure, the market got excited about them. Took the stock from 15 to 60. Now it's back down to 30. Small cap, 1.4 billion. Revenues are 266. They are making some money. The P ratio for the forward P is 43. Growth looks good for the year that ended May 31st. And the growth continues. Looks good. Well, actually, the growth slowed down quite a bit. In the most recent quarter that was reported, it went down to 21. So that's, I think, what caused the big sell-off. If they can get back to growing, this is a business that's going to get a lot of attention because we need power. And right now, these guys do some free cash flow. Their gross margins are low because they're manufacturing those products. So their fundamentals are quite low. They're not impressive. They're not super valuable. And let's say they do 25 million, really good business. So I would multiply it times 20 minus debt. Let's see if they have debt. They do not have debt. So they're worth $750 million to $1 billion, and they're priced at $1.39 billion. So I think investors are pumping the brakes on this, going, well, how much are they really worth? I would not be an investor in this company. When's their next earnings? It'll be February 5th, 3 months from November 5th. So if they come back with good growth, this stock's going to work. It's going to go up higher. If they come back and say, oh, we grew at 20%, 25%, I think the market's going to be skeptical of their success, and probably the stock's just going to languish, their stock price. So interesting company. Man, it is Small cap Friday. We are hitting all the small caps. Let's go over to Rivian. What is this car company worth? They're actually a combination. They're both a car company, but they manufacture the vans that we see Amazon Prime drivers, deliver packages with. So it's a combination. They're a $20 billion market cap company and not quite profitable yet over the 1 year. Wow, look at this volatility. Whew. Man, if you play this right, you can make some money. You just got to buy and have your exit strategy ready to go. And of course, when they IPO'd, they became, on their IPO, they were the second most valuable car company in the world, second to Tesla. And at the time, they had only delivered like 50 vehicles. So the market was a little too enthusiastic about them and sold off, harshly. But more recently, man, look at this stock. The volatility is incredible. You can buy this stock and then see it rise very quickly. Pretty impressive. Right now, we're kind of on a high point, so I don't think swing trading this is a great idea. I don't think I'm going to get to fundamentals that are going to enable me to get the valuation up to 20 billion, but I am curious to see where their growth is at. Their growth for the full year 2024 is not impressive. Their growth is getting better. So the growth in the quarter they closed September 30th was 78%. That's really good. So what did they sell? Did they sell more vans or? So when we look at cash flows, they are getting better, but they're not free cash flow positive. They have tiny gross margin. Look at that gross margin. Horrible. Profit margin. Terrible. Not good. So eventually they're going to become profitable, but their ceiling is going to be really low. That's why I don't like car businesses. That the ability to generate profits is really low for car companies. Their ability to generate cash flow is low. So we will never get, valuations like Google or Meta or Microsoft or Nvidia out of car businesses because their ceiling is very low. See how much cash they have left. They have about close to $2 billion. They're going to operate into the future, especially I think Amazon still owns a lot of their shares. So they're going to be fine because they have to produce that product for Amazon. When I say they're going to be fine is they're going to continue to operate, but the stock is untouchable. I cannot touch this stock. Margins are terrible. Free cash flows will be terrible. They don't make money. It's just not, I don't want to be in the stock. It would kind of like break so many of my investing principles. Like I invest a particular way. I'm good at it. I make money. I want to make more money every year. Rivian would be like, it would break 8 out of 10 rules. Like, no, I need to get this thing out of the way. So thanks for asking. Interesting to see Rivian. It's not an investment that I would make. And you can swing trade it if you just want to purely look at the technicals and buy it at the right time and sell at the right time. That's not how I invest. I invest on fundamentals. Okay. Let me catch up on the chat. Man, you guys are all over the chat today. Great to see everybody. Thanks for joining. And Rivian is a weird one. It is. I agree with that. All right. Yeah. I think your point being, if you look at, this is a ETF. I own this ETF, and you could always, If you're looking for a market and you're like, I'd like to know more about a particular market. Well, this ETF holds a lot of the bigger companies in that uh, country, like Tencent, Alibaba, Xiaomi, Pinduoduo, Meituan, NetEase. I mean, these are names that I'm familiar with. BYD, the big car company. Even I think Futu's in here somewhere. But that's where you can maybe have a jumping off point of, let me take a look at some of these businesses. So I own both an ETF for China. I own Alibaba, Futu, and I don't think it has C Limited in here because it's not in China. But you see JD in there and other businesses. So yeah, good idea. I'll let you guys talk about Fubo. Fubo is not a stock that I've ever owned, and it doesn't fit into the valuation process that I have. Kurt, good to see you. I've tried to look into India, and I always come up without having something that I feel comfortable investing in. I know that maybe 3 years ago, if you would have gotten into India, that would have been a great time to get in. Now the stocks are priced a little higher, a lot higher. When I look at PE ratios and so forth, I'm like, whoa, those are high. So I have looked at it, but I haven't invested in India. Yep. Looks like we agree on SATS. Looks like we have somebody holding on for dear life on Fubo. All right. So you want to look at ODD? Is that Oddity? I think so. ODD. I noted it. So yeah, I mean, where's the sale on stocks? Everything else is on sale. Looks like the market is establishing a decent day, 0.46 on the S&P. The Dow's up 0.62. So yeah, we're not getting a stupendous Black Friday sale today. And if I look at the heat map, yeah, I can't say that there's a big discount. Even although if you were looking, Eli Lilly's really expensive. I'm not buying it, but I think it's expensive. J&J is down a bit. Nvidia is down a little bit. Everything else is pretty green, man. A lot of participation. So I agree. Where's the discounts? Where's the buy one stock, get one free offer? No, I'm not a watch collector. No. No, I've looked at Siemens in the past, and Siemens is, I would say that Siemens and General Electric were like very similar. And I've never found my way to investing in Siemens. I think their valuation was just a little too high for me and decided not to invest. All right, so let's take a look at Oddity. So these guys do technology, and the last time I looked at them, it's a technology that enables, especially for the beauty industry and a technology out there, and then people can try on the makeup or see which product would be good for their complexion and that type of thing. So that's how I know the company. So they do a technology for that. And they're put into consumer staples, household personal care. Yeah. And that's where I guess people could go on there, kind of, I guess, enter their profile, set up a profile. Let's take a look at their fundamentals. So this is consumer tech. I don't know that I agree that they should be a staple. I don't agree with that. 2.45 billion in market cap, revenue is 780 million. P ratios look rational, reasonable, high discount according to analysts. And we've got good growth, 24%. Revenue on the quarter was 147 million. The trailing 12 months are up to 780 million. So the growth is good. They're still small, but the growth is good. Good cash flow at 105 million. Gross margins look good. Fundamentals look good. And they have a unique proposition. I'm not familiar with any other business that does what they do. 11 analysts cover them. All analysts have a price target above their current price target. And the forecast shows that they're going to keep growing, get north of $1 billion, and expand their profits, bringing down their PE ratios. Fundamentals look really good on this business. It's like very, very good. Take a look at their balance sheet. Make sure we don't have a debt problem. We do not. They have more cash than debt. So that looks good. What's the stock been doing? Stock hasn't been working. I put these guys more in a software category, where software category of, consumer software, or if companies, especially beauty companies, want to partner or license their software, then those beauty companies can use their technology. So that's where I put them. The 5-year, not great for a while, man. This thing really took off in 2025. Yeah. And it's really settled down. I think their fundamentals look really good. Their proposition is unique. But when is the market going to pay attention to them? I don't know. It's a small cap. The fundamentals are good, but they're not like fantastic. And they haven't grabbed the market's attention. So it's not a stock I'm in. I don't know that I'd get into this stock. But if an investor really felt high conviction in that stock, like, hey, I think they really have a strong business. I think they're going to grow for reasons that you have or that you've studied and observed, the stock is discounted. But it's not enough, okay, the stock's discounted. It's a small cap. Now, when do you buy? Do you wait for a upward trend to be established? That is the art behind investing. And small caps, as mentioned before, are treacherous. They look good on paper. They surprise on an earnings report, and we get hammered. So we got to be very, very careful, study them closely, look at their fundamentals, understand their business. I haven't gotten deep enough with Oddity where I'd be super comfortable with, oh, hey, I think they're going to do really well for these reasons. So I'm going to leave this one for other investors to take a look at, but the fundamentals look really, really good. And that's Oddity. Thanks for asking about Oddity. I think it was Mike that asked about that. All right. So, hey, Paul, good to see you. How you doing, Robert? Good to see you. Thanks for joining. Hey, Tomas, great to see you. Buying Meta again. Me too. Yeah, I think after their earnings, the price of Meta really went down. And I started buying like shortly after their earnings. If the market wanted to really sell it off, and I think the day that they announced, or the day after, because they announced after the market closes, the stock really went down a lot. Well, I bought shares. I'm like, oh, I'll take the discount. So I'm glad I did so, because those shares are now making me money. Good to see you, Tomas. Woo, man. There we go. Well, that's Meta's risen nicely over the short term. So if you're looking to get in and get out on Meta and make money, can't argue with that. Because this stock is the type that the market has this volatile relationship with it. It's gone up 9.4%, but it went down from its recent high 14%. I think overall it's going to continue on this trajectory higher. So I don't want to get off the train. I'll get off the train when it's $1,200 per share. For now, I'm going to stay on the train. You see this pullback, everybody who sold here was really regretted it, because it jumped up 56%. So this pullback where it went down, I think for me is an opportunity to accumulate more shares. And I really like what they're doing with their Meta AI glasses. It's a pretty exciting product. It's really selling well. And I'm really curious to see if it's going to be a material revenue line on their next earnings release. It'll be interesting to see if it becomes a material business. If it does, I think it's going to help the stock quite a bit, because they have their Meta AI business. They have their Oculus business that really didn't do much, but now the Meta AI glasses could really give them a physical AI business, and they'd have a really good lead in it. So we'll see how that plays out. They'll announce in late January, early February. So we'll see what happens, but I'm going to watch it closely. Pierre, thinking of buying some UNH. Benton. KWEB. It sounds like a radio station. Let's take a look at the stock. So Crane Shares China, Internet ETF. Worked for the 1 year. It's worked for the year to date. Really sold off. So Internet ETF. Okay, and which holdings do they have? Alibaba, Tencent. This is a good idea. Here's Qfin. So this is a good idea. I think these stocks are going to do well. Tencent is available in Hong Kong. You can't get it in the US. I think so. Alibaba is doing great. Tencent's a really powerful company. Yeah. So that's a safer way to enter China and spread your risk across many different stocks. Oh, I feel your pain. Yeah. So do you have any update on the thoughts about people fearing that we're in a bubble? So, the good news about having a nice little pullback is that it did pull back on some of these stocks that were priced way too high. So the fear of the bubble isn't as high as it was maybe a month and a half ago. And what also is productive is the market's shown that high prices will not be tolerated forever. NVIDIA put out great earnings, stock went down. And I could go down the list. I think Microsoft put out good earnings, stock went down. Meta put out mixed earnings. Revenue is great, too much capital spend. I'm not going to use that as an example. But what that shows is that stock prices were too high and the market started to pay attention. So valuations matter. That's going to help us avoid a big bubble. Are we in a small bubble? Maybe. Are some prices too high? Yes, but that's the case in every market. And we could find stocks that are discounted in every market. I think we can find them currently. So I think the AI bubble fear should not be as high as it was a month and a half ago. So thanks for asking. Mike, I'm going to wait for a down day. Yeah, I'm adding to Adobe. And, I've been using Adobe software, and I've been using some of their AI tools. They're really good. And I think their software is really good, market leading. So I'm good buying them. So are you concerned about, so that's it. That's a very good question. Yeah. So we hear stories, and the case of Adobe is AI is going to disrupt them. Now, is this story possible? Is it the conclusion feasible? Yes. But let's look at the evidence that we either seen or not seen Adobe get hammered by AI. So AI made its introduction, I'm going to say 3 years ago. It was late 2022. OpenAI came out with ChatGPT. It lit the internet on fire, and the fire's been burning ever since. And so some initial, or I should say some theories have been developed along the way where they're like, well, you're not going to need Adobe because you can go on Gemini and do image creation, or you can go on ChatGPT and do image creation. You can, and you'll get a mediocre result. That's been my experience, and I think it's the experience of most users. But let's carry on. Have customers completely abandoned Adobe and said, no, we don't want to buy your software anymore because we're going to go on ChatGPT or Gemini or whatever and avoid paying you all the big bucks? The answer is no. Here's the evidence. As of August 29th, their revenue continues to grow at 10.7, showing that it's already a big business, above $20 billion of revenue per year. It continues to grow. So the theory so far that AI is going to take away revenues from Adobe so far is untrue. It's not conclusive. We're concluding the opposite. No, Adobe's fine. Look at the growth. So if we keep seeing Adobe put up numbers like this, pretty soon the market's going to have to acknowledge AI is not going to disrupt Adobe. Let's look at Duolingo. Now, Duolingo, you would think, boy, they really are putting themselves right in harm's way because they do mobile learning, but they make it really fun. And you can learn another language and so forth. And again, same theory. It's going to disrupt them, so forth. Stock's been beaten down. Okay. So our customers running away from Duolingo saying, oh man, I can go on ChatGPT and learn languages faster, better, smoother, quicker. Nope. They're accelerating their growth. What gives? Do I look at facts, which is what I'm looking at here? Duolingo's growing. Adobe's growing. Or do I listen to the stories, the theories of somebody saying, hey, looking at my crystal ball, I watched The Terminator and The Matrix last night, so I feel like I could tell you the future. And I think Adobe and Duolingo are going to get disrupted. That may be the case, but I'm trying to look at facts, figures, evidence, and the evidence tells me Adobe is not being disrupted. They continue to grow and flourish, and Duolingo continues to flourish. Now, the opportunity is that a lot of people are listening to the story, to the theory, and have discounted Adobe. I think at some point, investors are going to start paying attention to the evidence, to the facts that are on the table, and Adobe is going to have a really good rise. I've been waiting for a while, and I'm going to continue to wait. I'm averaging in, continuing to add shares, trying to be measured about it. That's a different way of saying I'm taking my time. I'm not like jumping in the pool head first. But I think we're going to wake up a year from now and Adobe is going to be much higher. This is a terrific business, number one in their category. Their margins are awesome. You want to see awesome margins? Let me show you awesome margins. 89.14% gross margins, profit margins 30%, free cash flow yield 41%. That's awesome. We looked at Rivian. Rivian was like gross margins 3%. It's like, whoa, how will you ever make money? These guys 89%. So when you license Adobe software, they have uniquenesses that people want, and they make a lot of money on that type of industry. So Adobe, man, $134 billion in market cap. It's just a good opportunity. Forward P of 14. They're growing above 10%. It's a good opportunity, in my opinion. And the law of 40, I think, I know Shadow Guy tracks this. I think it's relevant. So we got 10% plus profit margin is 30%. So we're above 40. If you're above 40, if you add revenue growth rate plus profitability, if you're above 40, that's a good software investment. This is a good software investment in my book, and I've been investing. And Duolingo's also defying the theories that are out there that, oh no, AI is going to kill Adobe. It's going to kill Duolingo. Well, so far, that is not a realistic theory. It is being unproven, disproven each quarter that Adobe and Duolingo put out their financials showing that, no, we're actually growing. So, and I know that, it takes a while for these things to get themselves through for the market to realize it. I mean, if you look at what the Meta stock dealt with, the stories around Meta were like pretty bad, pretty toxic. They deserve some of the criticism, but not to the extent of selling off the stock by 76%. And this was over the course of over a year. But I thought the market was out of its mind and was buying Meta. And that proved to be really good idea. So when will the market make the turn? I don't know. But I think it's going to make the turn. Maybe in the next 3 months, maybe in the next 6 months. But I'd be surprised if the market doesn't realize it. If Adobe and Duolingo continue to put out just great earnings like they have been, the market's just going to have to ignore the theory and study the facts. And I think the facts are going to carry the stock higher. All right. So we covered Duolingo. We got an Upwork request. Upwork. Great. So I am going to put Upwork on the list, but I think I'm going to take a a 5-minute bio break, and then I'm going to come back. So let me catch up on comments here, and then I'm going to take a 5-minute break. Mike made some money on Duolingo. Nicely done, sir. Yeah, so like Adobe is making products that are going to be AI products, and they might be able to sell them. For all you know, Adobe's going to accelerate their growth. I know Microsoft's creating AI products that they sell alongside products that have been around for a long time. Adobe can do the same thing, and so can other companies. PBRA, nice. Very good. All right, so I wanted to do a longer stream today, but I wanted to just take a quick break. So I'm going to leave you with the heat map, and I'm going to come back in a few minutes. Let me take this comment off and put up a banner. Taking a 5-minute break. I'll be back, guys. Hang with me. We'll come back and we'll pick up talking about Upwork. And then I'm going to execute my trades. I think I have an hour and a half to go. So I wanted to do those, and I'll speak through it and share with you what I'm going to be buying. And I'm thinking of selling Wix. But right now, what stocks are kind of enticing? Oscar's down. That's not one that I would buy. It's down a little bit, 1%. It was up 37% 2 days. So I don't know about that. Google's down, probably buy that. And I'll probably buy some Procter and Gamble. Probably buy some Alibaba. That's it. Not a lot of choices. A lot of my stocks are up. Reddit is up nicely. C Limited, go C Limited. EQT, that's what Mike's thinking of taking profits. It's up nicely. A-Lab up. eToro up. Nice. And Meta's up. All right, I'll be back, guys. Hang with me. See you in about 5 minutes. And let me turn on some music for you. Nah, I'll leave the music off. All right, guys, back from my break. Let's see what's going on with the stock market. And before I forget, I wanted to execute a few trades. So it looks like NVIDIA is down a bit. Google is down a bit. So all right, so let's see here. So I've got in a different screen my brokerage account open. I think I am gonna see here. Yeah, you know what? Let's just have a little fun here. Go ahead and up my position in NVIDIA. I've got a tiny position. Let's just go ahead and add a few shares. See if I could make a little money on NVIDIA. I think it's being overplayed what NVIDIA's business is going to be impacted by Google. I love Google, but I think it's overplayed. Oscar Health is down, but I'm just going to let that one ride. Google stock is down, so I would like to buy some more Google. I think that stock's going higher. So let me do that. And Robinhood's down slightly, but I've got a lot of Robinhood, so I'll let that one ride. Let me buy some Procter and Gamble. Buy while those safe stocks are nicely discounted. I'll add some more Procter and Gamble. Now, I'm only buying those stocks because the other stocks are priced quite high. There's no Black Friday discount on. It's pretty much like a Black Friday sale, right? They put the stuff on sale you don't really want. And then the stuff that you want is priced higher. Well, that's my case. Reddit's up higher. C Limited is higher. EQT. Coin is up. Well, Pinterest is up. Isn't that interesting? Huh. Astera Labs. Oxy's up. Mercado Libre is up. Meta's up. Very good. eToro is up. Looks good. All right. So got that done. Not a lot of deals out there. It's been a really good week. Stocks have gone up. Stock market is in a good mood this week. It has decided to play Santa Claus. Santa Claus is coming to town, giving us 4.56% in appreciation over the last 5 days. All right. And today, where do we sit? We've got the Dow up 0.65, and we've got S&P 0.41. Looks good. This week's been a real good one for my portfolio, taking the gains into account from today. It's been a really good week. And it was looking like a terrible month, right? Before we had this week, it looked like we were going to have a terrible November. But here we are, sitting on a really nice rally week. We'll see if it continues. All right, so let me check the chat, and then we're going to jump into Upwork. All right, so Bo, good to see you. Of course, the Rule of 40, Palantir. They might even qualify for the Rule of 70. Their metrics are so good. So I don't buy any nuclear or rare metals. I don't buy any nuclear power generating companies. I don't buy any nuclear technology companies, nor uranium or any of that, or any rare metals. I'm not into that particular investing class, or asset class, I should say. All right. So let's take a look at Upwork. Now, Upwork's one of those stocks that theoretically should be really working because they're in the gig economy. So I'm like, boy, there's a lot of gig workers. Why isn't this stock doing better? But it hasn't done all that great. It's up 16%. Year to date, it's up 20%. And actually, I haven't seen the stock because it's doing better than I remembered. When we look at the market cap, 2.5 billion, $780 million of revenue. P ratio for 2026 is 14.5. And when we've got revenue growth of 11% full year, let's take a look at the quarterly. See, this is where I feel like the company's not doing all that great. This is a small company and they're not growing. And it's like, theoretically, more people are taking on like gig work, right? Retirees, they like doing gigs. They might have, they had a career in a particular industry. They don't want a full-time job anymore, but you know what? From time to time, they'd be interested in working on a project here or there. Upwork, or a college student. Hey, I can't have a full-time job, but I'd love to do gigs. Perfect. People in other countries that want to do business with companies that need their skills in another country. Upwork. So there's a lot of like good reasons why this company should be growing. But the evidence in their financials is showing me that this business is struggling. They're only growing by less than 1% in Q1, Q2, and grew 4% in Q3. So being a small business, this is like, there's no excuse. They're like, guys, your addressable market should be huge and you're not growing. So I'm really concerned. So my concerns on Upwork, are because of this revenue growth. And I'm concerned about it. Trading 12 months, revenue growth looks bad. Free cash flow looks good. Margins look good. Profitability looks good. I'm good with all of the above, but I'm really concerned about that revenue growth. So this one is not a buy for me right now. It's a watch. If they can grow up, I would like to be an investor. If they don't grow, forget about it. Something's wrong. Either the business isn't operating well, or maybe my theoretical expectations that the gig economy is a good one are incorrect. But something's not right here. Analysts think it's discounted by 10% and that they will begin to grow. Okay. Now, this is not knocking my socks off 5% growth. They can grow like 23% this year. That would float my boat and I'd be interested. But man, this is not good growth and the PE is going to drop substantially. This one here, for the reasons I just laid out, is not a buy for me, but I do agree that it's discounted. But it's discounted kind of, for a reason. It's not exactly Reddit. It's not growing by big percentages and aiming to be a very big company in the future. 37% discount if we really discount the company on its cash flows. And this might be a little optimistic. Yeah, more like 22% discount because the growth is not meeting what they should be doing. So that's Upwork. I'm being careful with it. My sentiment is quite concerning. Like, hey, there's something wrong here. Don't get it. Why they can't grow. And Upwork, I would completely pass on. Thanks for the question on that. All right. So we've covered a lot of ground. Geez. I don't know if we've covered 15 stocks or so. That's been good. We've covered the market, where we're at with the heat map. The market will be closing in 1 hour and 9 minutes. And it looks like the healthcare space is selling off. Now, there's a stock that I've been thinking I should sell. Maybe I can go there next. And the stock is going to resemble these here in the software space. And the stock is Wix. Wix is up a little bit today. And here's my theory. Here's my reasoning. Stock's just been hammered, right? $5.3 billion market cap, revenue of $1.9 billion. Forward PE is moving down to 14.7 for 2026. Highly discounted. The business is operating well. You have decent growth. We're not breaking any records, but it's good growth. 13.6 on a $500 million number. Free cash flow looked good. Gross margins look good. But the stock just is not performing. It's actually had, I think, a horrible month. And they announced on the 19th. And the market just doesn't like them. It's like reading into their financials. And this is another one where the market's thinking, oh, yeah, we're going to use AI and it's going to create websites magically. Wix creates websites. So you can create websites on the Wix platform. And I just disagree with that. I'm like, no, you're going to use something like Wix, and actually Wix can use AI to their benefit and probably to make the experience of creating a website that much easier and better. But the market doesn't, I guess for the time being, the market's just discounting software stocks left and right. Now that we have a market that is approaching its all-time high again, geez, right? So let me go back to 6 month. So here was our all-time high on October 29th, 68.43. We are at, I'm sorry, I read it wrong. 68.90 was the all-time high for the S&P. We are knocking on the door of being all-time high. So I like to sell some stocks, even though I don't want to sell them when the market's this good, just to create some cash. While creating cash is a good idea. And unfortunately, I am voting Wix off the island. And adios, Wix. I'm going to go ahead and sell Wix, wait for a better entry point, and put that capital in the capital pile available to deploy. I'll wait for a nice sell-off and then start buying in quantity. But for now, Wix is it's on my portfolio, but I just clicked the button. It is no longer in my portfolio. Wix is out. So I probably, when we're in these expensive markets, is I push myself to sell a position. It can't, not all positions are going to continue to flourish. And, I kick myself when we have a high market. And then if we do have a substantial pullback, it's like, oh, I don't have enough capital. I should have sold XYZ stock because my conviction wasn't very high. It was a good stock to sell, or, for whatever reason. So that's one that I sold. I also sold earlier in the week. I sold 20% of my Zoom stock when it flew up like 10, 12%. I sold 20% of that. And I sold probably 80% of Pinterest. Pinterest has just been getting shellacked. While, in the same sector industry, Google Alphabet's been flourishing. Reddit's been doing great. So sold some of those stocks. All right. And so I like everything about Wix, Mike, but the market doesn't. And at some point, I just have to with Wix, I'm willing to buy it again once it starts to perform. And we'll see if that plays out favorably for me or not. But I forced myself to make that decision. It's not a big one, by the way. Wix was a small position. All right. Another stock that I wanted to go over. We went over Upwork. I don't see any other request out there. So I wanted to look at Oscar. It's under some pressure today. But the last 5 days have been a good last 5 days, right? It's up 37.9%. But for the year to date, up 33%. That big gain helped out the stock. 1 year, only up 6%. And this is playing off of the expectation that there's going to be a deal to help subsidize individuals getting health insurance in the US. That's really going to help Oscar as well as other health insurance companies. And that news would be a big tailwind for Oscar. This business, it's got the right stuff. I really like their growth. Their growth has been good. They're getting to a very good size. This is an $11.2 billion revenue company, growing very quickly. With that subsidy, if it gets approved, I think the growth for Oscar is really going to accelerate. And I think the stock's really going to work going forward for 12 months. I do own a modest position, like a 1.5% of my portfolio position on Oscar, which is a good sized position for a high risk stock such as Oscar. Free cash flow looks very good. It has been better in the past, but it looks really good. And health insurance companies don't make a lot of profit on their product, but the volumes is where they catch up. Like United Healthcare, Elevance, Oscar Health, they make money because of the volume of policies they sell and the volume of the business. We've got 7 analysts covering Oscar, and they are not keeping up with the stock. They think it's priced 17% too high. We have 13 analysts putting in their 2 cents on the forecast, and they're probably going to have to restate their forecast if the subsidies get approved by the U.S. government. If the subsidies get approved, I think they're going to grow really well in 26. Oscar is one of those stocks that they have a big addressable market to sell into, and they have a good, unique value proposition. And these guys, when I value Oscar, I come up with a 49% discount. And that's my forecasting their cash flows, forecasting on growth rates I think they're going to achieve. So this one here, obviously the last week really made a positive impact on the stock, but I'm really glad that I held my Oscar shares. So Oscar Health, moving up and moving up fast. I also own United Healthcare, which is a like company, but Oscar and United Health sell to different parts of the same market. United Health being a seller to more of the corporate client that has many employees, selling insurance into that space. Oscar selling to individuals and small businesses. So Oscar Health, under pressure. All right, so now Palantir was brought up a couple of times. Oh, here we go. DJ, good to see you. You want to look at GTLB? Let's take a look. GitLab. Okay. GitLab, together with its subs, develops software for the software development lifecycle in the US, Europe, and Asia Pacific. So teams that are working on creating a software application or some other type of technology project can use GitLab. This stock year to date, down 27%, down 35%. And I think this one is affected with the theory that with AI, the number of software developers that are going to be needed is going to go down. And I think that theory is what's really impacting the stock and having the big sell-off. See if they're growing their revenues. Market cap, 6.87 billion. Revenues of 857 million. Forward P of 46.8. When we look at the growth, good growth, 29.23%, very good growth. So I don't know that the theory that AI is taking away revenue opportunities for GitLab is real just yet. Maybe in the future, but right now, GitLab's growing. This is kind of in the same category as Adobe and to a lesser extent, Duolingo, but Salesforce for sure is dealing with the same pressure, which is its stock selling off, even though those businesses continue to grow their top line, showing that no, customers like our software. They continue to buy more of it. They continue to pay us good money for it. In the case of GitLab, let's take a look at their margins to see how profitable they are. 88.5% gross margins. Beautiful. And they have free cash flow. Not a lot of it because they're a little young, a little small. But those gross margins really look good. 88.5. They have a high ceiling of profitability. So that looks good. Looking at their forecast, we've got 27 analysts covering the stock saying it's 41% discounted. Every price target is above its current stock price. Looking at a forecast of the business, it's going to continue to grow nicely in the next full year and the year after and the year after. Profits are going to expand nicely, getting their PE ratio down to 27 3 years from now. So factually, AI hasn't disrupted this company, but the story kind of makes sense, or I should say the theory, one can understand it, but so far it's not directly resulting in, this business is losing revenue, or its business customers are going away from GitLab. That isn't what I'm observing here. It's actually that this business continues to grow. Meanwhile, the stock is under pressure. So GitLab is a little bit like Wix that I just sold. Now, when will these start to rally? Man, I don't know, but you could see that it's just a general theme. GitLab's discounted. If I look at their free cash flow generation, I look at how they're supposed to grow, I look at those factors, this is a good looking stock. I don't see why the market's selling it off so much. So that's GitLab. GitLab is in the software space. The software space has not received a ton of love. I'm going to go with let's go with the 3-year. Here's the heat map for 3 years. You can see that NVIDIA has just flourished. Other stocks that are flourished. Look at Palantir. Oof. Amazing. Broadcom. But look at down here, software applications. A couple of them had modest gains. This is over 3 years. But Adobe is down over 3 years. ADBE, that's not a good example. But this space here has not kept up with these other spaces that have just killed it. And I think that the market's trying to figure out, okay, so AI is going to change how we use technology. It may change the pecking order, similar to what we're hearing about Google. Hey, ChatGPT is going to take away search volumes. The amount of search is going to go down. But when Google Alphabet would announce their earnings, they would continue to show that search is growing. YouTube is growing. Everything's growing. So it was concluded based on, I would conclude based on Google's stock appreciation over the last 5-6 months that now the market's like not believing the theory that, oh, ChatGPT is going to disrupt Google search. So is a similar change in perception going to happen for Gitlab, Adobe, and the other software plays? I think it will. I just don't know when. I don't know if it's going to happen 3 months, 6 months, 9 months. I'd be surprised if we're sitting here a year from now, and it still hasn't made the turn, because at what point are we going to continue to see these companies continue to grow? And we don't believe that, no, we still think AI is going to disrupt them. Nuts. So that's where we make money. I make money when I'm looking at facts and thinking, well, the market, I think, has got it wrong on these companies. So I'm going to pay really close attention, because when they start to move, it's going to be a real good move, and it's going to make high appreciation. So let's make money. We don't have to argue with the market. I forget the specific terms or the martial art, but basically, to be effective, I think it was in Kung Fu or one of those, is you use your opponent's energy in your favor. So if they, in essence, like throw a punch, you kind of go with it and use their momentum in your favor, right? So let's use the market's momentum, or maybe that they have a particular theory wrong, in our favor. All right, so let's take a look at our friends over at Google and kind of follow through the most recent example of how the market was like, oh, search, man, search is on its way out. Search is dead. Yeah, maybe. Let me look at the 5 year. So we had some peaks here. The market was like, yeah, during this time, the reason I'm going to highlight this is all other mega cap technology-based companies were on their way up, but Google was being left behind with the theory that ChatGPT was going to take away substantial portions of search, that market was under threat. And Google just kept putting up awesome numbers and actually loaded up their business with very valuable assets. Then the market realized, oh, you know what? I think we were wrong about that. And everybody joined the party, and we're up 115%. Great. So that's why I continue to repeat, I think Google's a great opportunity. I went out on a limb and, shared that with you guys, and, shared it with a tone that's what I believe, but I'm not telling anybody else to believe it, but that's what I thought was going to happen. And I bought shares. It's the biggest position that I have now. Well, this is how we can make money when we think the market has something wrong. And I think it has software wrong. I think software, we're going to see something like this. So let's pay close attention. I'm streaming multiple times a week. We're talk on Discord. So when it starts to move on software, I think we're going to be able to make a very, very good rate of return. And I think we can probably do it in 2026 and probably extend into 2027. And I think 2026, we're probably going to see how AI is being used, truly, how it's really coming into the market and benefiting, changing, evolving technology companies, including software companies, including hardware companies. So I think we could watch it and try to stay ahead of the curve and understand it and take advantage of it. So, all right. So we went over GitLab, covered that in detail. So on GitLab, you may have seen the percentage falling, and you always want to keep an eye on is as a company gets bigger, you should see the percentage begin to decline because it's a bigger number. So growing a bigger number, you may still be expanding by a larger dollar wise portion, but the percentages are shrinking over time. So if it's a reasonable decrease in the percentage, we're good if they're getting bigger. But you're right. If we were to see a big decline in a percentage, we got problems. What's going on? Why are customers not buying? Why are customers going away? Is this particular software not good enough? Is their competitor eating their market share? So yeah, that's how I would treat it. Now, as we look at all these quarters, I'm seeing that it's declining gradually because these numbers are bigger, right? To grow 150 million number by 32%, perfect. But now you're 235, bigger number, growing at 29%. So if I grew that number, I'm going to end up with like 65 million in revenue growth. But when I grew this number by 32%, I'm going to end up with about 50. So the overall mass of growth is better in the current quarter. So this one looks okay. So it's a good question, a very good question that you should examine that financial and see, is the decline naturally because it's a bigger number and it's harder to grow a bigger number? Or is it because there is something broken in the business? Because if it's something broken in the business, we got to call that out. Got to be careful with that business. Thanks, Mike. Appreciate your support. All right. Tony, what's up, buddy? I bought OPRA and then I sold it. I think so OPRA, this revenue decline. Well, let me take it from the top. So this is a small cap, and this year it's really sold off. Small cap stock, they do a browser. And they have a browser product. I think it's most popular in Europe. And some fundamentals look really good with the company. Let me double check to see. They had their earnings the 29th of October. They were selling off into the earnings, and they continue to sell off. This is back to, I just sold Wix because I'm like, man, the market just dislikes software plays. And this is a very small cap. If this thing catches a nice rally, I think it could go up substantially. Over the 5-year, it hasn't, it had a really nice run in 22. But other than that, nothing glorious to show you. Market cap, 1.2 billion. P ratios are really low, really discounted according to analysts. And when we look at their revenue growth, that's the full year. And here's the quarterly. The quarterly looks good. There was kind of an acceleration here, which looked good. And then it somewhat decelerated. But it looks like their growth is a little bit, it's positive. 23% is good, but it's not linear. we had, it went from like a little bit of a slow growth about a year and a half ago. It accelerated and now it's decelerating. Taking a look at their margins and other metrics, free cash flow, they produce free cash flow. Their margins are a little low, 51%. And I've showed you a few software stocks that have gross margins of 85, 89. Those are nice high ceiling stocks. This one, 51. So the ceiling kind of comes down. They won't be able to ever have crazy margins and cash flow, but it's still very decent. So this one here I sold, I don't know, a month and a half, 2.5 months ago. I thought it'd be a wise play, but I'm glad I sold it because I think I avoided some pain and suffering on this one. So I sold it and I have it discounted, but man, we can spend the next 3 hours going over discounted software companies. We just have to wait for the market to make this emotional turn. OPRA is discounted by 63%. So we have to wait for the emotional turn, similar to the one on Alphabet. And then once the market starts to flourish, it takes off. I mean, we can go to Netflix. Not too long ago, the market thought, Netflix is just terrible, just horrible. The worst company in streaming. And it wasn't. It was ridiculous. So I bought that stock and wrote it up. Don't have to argue with the market. I just have to rationalize it and go, this stock market's out of its mind, and buy at the right times. Once it started to work, I bought more and more, and I really wrote it up nicely. I probably sold around here and took the gain. I don't regret selling it because I think Netflix is priced too high, but that's just one more example. We can kind of do our own thinking and look at these businesses, look at their profitability, look at their growth, and wait for the market, use the market's energy in our favor. Yep, it's selling it off. Wait for it to rally. Okay, let's put some capital in. Hey, it rallied higher, put more. Rallied higher, put more. And you can own this thing and be on a nice gain. Or if you're like me, I took the gain and cashed it in. So that's where I'm at with OPRA. Good to see you, Tony. CoreWeave. So CoreWeave, I don't have anything against CoreWeave, but I've said a lot of my analysis reveals, look at that, forgot how to type. My analysis concludes that this is high risk and investors are probably going to lose a lot of money. And I've got videos on my channel, right? It's not a stock that I've avoided. I do have experience in this space, and I put it out there. And it looks like it's getting hit. So what's the concern, right? So CoreWeave started off as a crypto miner, no problem. They learned how to operate GPUs, good for them. Then they started doing data center services. They signed some contracts for companies that would be moving their workloads over to their data center. Great. Now, let's take a look at a couple of things that are important that I think are risk flags. So they IPO'd recently. Okay. So we don't have a lot of history. First risk flag. Okay. We don't have a lot of history. When they IPO'd, the market was like, and then it rallied higher because things really got heated up in the whole data center, AI. Wonderful. $36 billion market cap, revenue of 4.3. They are growing. Got no problem with their growth. Okay. Very good growth. Okay. But let's take a look at, so they grew and they're burning cash real fast because they have to buy GPUs and all that good stuff. And thanks, Mike. Good to see you. Gross margins look good. And just the free cash flow burn is pretty high. Now, this is where the free cash flow margin for this type of business, they buy GPUs and then they use them for a while. The companies have been probably using too long of a depreciation timeline. And you've heard Meta being criticized for it, that they took what used to be depreciated over 3 to 4 years, and now they're depreciating it over 6. What that does is it makes their margins look better. But in fact, maybe you should be depreciating an asset quickly, 3 to 4 years, and truly representing what that asset is costing you. So that's been a concern the market's had with CoreWeave as well as Meta and others. So where do I want to go to? I want to go to statistics. Debt. Debt is the devil. 16.87 billion. Now, that isn't too bad if they can get big. Like if they can get to 100 billion in revenue, no problem. But right now their debt to EBITDA is 6.27. If they do not grow fast enough, this is going to become the biggest problem with this stock, is the high debt. So that's risk flag number 2. Risk flag number 1, it's a new IPO. I like to stay away from them until I've got a good track record of earnings reports. I really understand the business. Second red flag, too much debt. Now, these guys are in an industry which is providing infrastructure services where their customer can turn this off. If they're like, you know what, we're not going to invest as much in AI as we thought we were going to, like Meta. They're like, Meta's stock price has been falling because they spent too much. Well, logic would tell me Meta's probably not going to spend as much on AI going forward. Having said that, they're probably going to pull back on like the contract they signed with CoreWeave and others. Well, if other companies, because if Meta AI can't pull off AI at this torrid rate that the market's been going in, and many companies do that to CoreWeave, and all of a sudden they go from high growth to no growth or slow growth, they're done. It's going to be ugly. And I think the market's beginning to feel that way and selling off this stock because it's a high risk stock. It doesn't have any other business to fall back on. CoreWeave is competing against AWS, which is Amazon. Amazon has the biggest cloud infrastructure business on earth, and they have the biggest e-commerce business on earth, and they have Prime Video streaming. They do advertising on that platform. So Amazon's going to be fine. Even if they had a recession in data center spend, they're going to be fine. But CoreWeave wouldn't. They have one industry that they're dependent on. If you see a recession or a pullback in that industry, it's going to be ugly. So CoreWeave is it's priced too high. And it's too risky for me. Too risky for my blood. I give them a very generous valuation. So that's where I'm at with CoreWeave. I am staying out of it, and it's interesting to see where the stock's at. Last month, it's down 46%. Ouch. All right. So I did sell 80% of my Pinterest. Just waiting that one out. I'm like, God, man, the market doesn't like Pinterest. And here's the rub on Pinterest, right? All right. Here's what's hard to understand about Pinterest. Here's Pinterest, and I'm going to compare it against Meta. And I'm going to compare it against Reddit. I think those are 3 good companies to compare against one another. Today is not enough of a date range, but we look at the year to date. Pinterest is down 9.45. Meta has had their problems. They're up 10.26. Reddit's up 33.25. So obviously the underperforming stock is Pinterest. Over the 6 months, it's even worse. Reddit's been killing it. Meta's been recovering. 1 month. Meta's gotten smashed after their earnings. Reddit's held their stock. Pinterest, they had good earnings. The market still sold it off. So I'm like scratching my head going, I can't figure out Pinterest. I thought it'd be a good investment, good margins, good, decent growth. They're never going to be a Meta. So I'm like, you know what? I'm going to sell my Pinterest, 80% of it, and I'd rather put more money into Reddit. And I've been putting money into Meta. So that was my train of thought there. So sometimes, I just I gotta fold them, like the country songs by Kenny Rogers. You got to know when to fold them. And I decided to take some capital out of Pinterest, especially in an up market like this week. Take some capital off the table, put it in the dry powder keg, and wait for this market to really sell off. And then I can buy stocks at a great price. For the time being, I'll dollar cost average into Meta, which has been sold off over the last month. So that's what I did with Pinterest. Spotify. Ooh, the chat moved on me. Spotify is expensive. I love Spotify, the service. I was listening to it yesterday on my drive to Thanksgiving dinner at my sister's. She did an awesome job. Food was delicious. And this stock, year to date, it's still doing great, but you can see that it's pulled back. It's just too expensive. And if we compare Spotify, this would be interesting, right? And I think Netflix is expensive too, by the way. I have a theory that a lot of investors that really understand product or companies like Spotify, Costco, Netflix, they are very comfortable with the stocks. They're willing to buy them, right? And they understand this model. Now, this is a high PE stock, but it's not growing all that incredibly fast. 18% for a super high PE like that. Quarterly, look at that growth. And I think the question earlier was, is a declining percentage growth rate a concern? When you're declining this quickly, the answer is yes. Okay. You went from 18 to 15 to 7. Yeah, this one is declining too fast. This one I cannot defend the company because of their size. It's like that was too fast. So that's a concern. Customers are cutting off their Spotify subscription. Fewer customers or organic new customers are coming on the platform. That is not happening. But when we get into the valuation itself, let's see what analysts are saying. Analysts believe it's really discounted because they just base it on their earnings per share. And it's supposed to keep growing, but they just showed us a quarter that showed 7% growth. So I don't agree with this growth rate. Their PE ratio should come down to the 20s in 3 years. That's too far away. The stock's just too expensive. And I think it's really going to get corrected. They also lost their CEO. I think he planned to retire, but or kind of move on and do something else because I think he's relatively young. This stock's just priced 24% too high and it has no momentum. So I'm staying out of Spotify. I've been a fan for a long time, but I've never owned their stock. I think it's too expensive. That's Spotify. So, all right. So, Genetic Smite, how are you, sir? You're welcome. Thanks for the comment. Appreciate it. All right. So we're going 3 hours. Awesome. Marathon. And we've got a market that is rising. Let's see here. Now it's kind of taking a step down, right? We were at higher stock prices a little earlier. Let's take a look and see how the heat map has changed. Google coming back. I already made money on those shares I bought earlier on this stream. Genetic Smite. No Thanksgiving in UK. Awesome, man. Thanks for the comment. I've got a good number of members from UK. Awesome. You know, and I have London and UK on my bucket list. I would love to visit your country, and I'm sure that's going to happen in the future. I don't think I have to ask my wife twice on that one. All right, so market's going to have what seems to be a favorable day. We're 30 minutes from the market closing. Meta's still looking like, man, everybody who bought Meta in the last week is glad they did so. Software, look at that. Software is catching a bid nicely. Uber, nice and high. Good job, Uber. Let me take a look at my portfolio and see what's going on. I'm still up nicely. Good. Google's coming back. That's good. NVIDIA's still where it was at before. Alibaba is down a little bit. eToro is down a little bit. You know what? I would like to buy some more eToro. So let's buy some more eToro. All right. I have a small position in eToro. I just bought some more shares. It had a very good week, so I'm willing to put a little more money in there. Very good. Right now, my top performing stock for the day is Reddit. Number 2, C Limited. Number 3, EQT. Coinbase. Boy, wasn't that interesting to see Bitcoin prices do what they did? And Coinbase, of course, is tethered to the price of Bitcoin, because it's just, you know, they're part of the same ecosystem. But Bitcoin, boy, the last month has been a doozy, huh? So we went, and actually, let me go to the 6 month. So Bitcoin hit a high, $124 per coin. And boy, did it slump. Over the course of less than 2 months, it went down 32%. So it put a lot of pressure on like MicroStrategy and a lot of businesses around the space. I think Robinhood held up pretty good, by the way. But now, you know, it's good to see that, you know, we've seen a rise in the Bitcoin, 7.5. So we've risen up to 90,000, and it was higher earlier today. Yeah. It was up higher. I saw it earlier. Yep. So it's down 2.5 from where it was at before. But boy, that was quite a ride on the Bitcoin, huh? So Coinbase, and then Pinterest is up. Good to see. Astera Labs is up. Mercado Libre is up. That's been a stock that I've been accumulating. AppLovin. I've been accumulating AppLovin. Man, that's such a rock star company. Uber up almost 2%. I own a lot of Uber, so that's a fantastic gain. I've made over $2,500 on Uber today. I made over $5,000 on Meta. Good. I can get used to that. And PayPal is up. That's good. That stock needs a few green days. Novo Nordisk. Who out there took the Novo Nordisk dip and bought? Novo Nordisk getting that dividend, beating down stock. It's been doing well for the past week for sure. Target. Man, I am shopping at Target and I am buying their stock. Although the market is not making it easy, keeps going up higher and higher. So it would have been nice to, I'll get plenty of time to do it because it's so beaten down. I'll just wait, be patient, but I think Target's going to perform well. Qualcomm is up, Amazon's up, ASML is up, Adobe catching a bid. Nice. So the software space is getting a little love today. Fortinet's up, UPS is up. UPS has been a winner for me. I picked it up this year at the right time. Great business. Adobe's Airbnb, is up. CBS, total winner. CBS is a total winner for the year, and it pays a big dividend. Intuit is up. United Health is slightly higher. And then Care Trust REIT, that's been a total winner for me over the last 3 years. I've more than doubled my money, and it pays a big dividend. So nicely done. All right. So that's looking good. So Tony, and I think you were referring to Spotify. Yeah. Again, Spotify, there's some stocks that investors feel really comfortable with. I think Spotify is one of them. So it'll always kind of trade at a higher price. Yeah. I mean, it's BTC's done better. This, over the last 5 days, it's done better. Yes. So the question here is, so we have what is expected is going to be a big robo-taxi industry where we have all these, what I'm going to call as robots in the form of a automobile show up and take you from your home to maybe the airport, or maybe you go to the movies and then you want the service to take you from the movies to dinner, and you know what I'm talking about. Maybe take you to work every morning. So that way you can check your email messages or check your portfolio and feel like, oh, cool, man. I get more time on my calendar because I don't have to drive anymore. I can just keep calling these robo-taxis. Is the industry going to be big enough for Google, Uber, Tesla, Amazon? I think it will be. Now, the two companies you're naming have the upper hand right now. Uber has the biggest customer base that is accustomed to fetching a ride on the Uber platform. And Uber is partnered with Google in 2 cities, Austin and Atlanta. So when you go to Austin and you fetch an Uber, I was in Austin this summer, you're given the choice. And if a robo-taxi can pick you up, it'll say, hey, you want to take a robo-taxi? And yes. That'll eventually become more of a standard, like, hey, I'd rather just have robo-taxi. And it's also some research has revealed that women are more comfortable getting a robo-taxi as opposed to being picked up by an Uber that is driven by a guy. And it's just research they came up with. And I can understand why. I can understand that, when you're being driven by a stranger, that may seem awkward, just in general. And with the robot, you're like, oh, okay, well, it's a machine. It's a robot. It's run by Uber or Google or whomever. So back to, is the space going to be big enough for all these players? Yes. And I think we're going to see delivery, like food delivery, product delivery. That's all going to become better. We could see new forms of mobility be offered. And I think both players could really benefit. And Amazon's coming in with their Zook service. They want to compete. We'll see who takes the most share and is going to have the upper hand. it's going to take 5 to 10 years to figure out who's going to be the next, to use an example, who's going to be the next Meta and be dominant in social. Will there be like one dominant player, or will it be like a 2 or 3 or 4 horse race? That stands to be determined based on how good the robotaxi service is, how good the execution from the company ends up being. All those factors are going to weigh in on who's going to take the biggest amount of share. And I've got a front row seat. I own Google, I own Uber, I own Amazon, and I will observe it and see who's going to win that battle. I think it's going to be a pretty big market, because as robotaxi becomes bigger and bigger, I think you're going to have fewer car sales, automobile sales. You're going to see, I think, behavior patterns change. One no-brainer, right, is I live in Los Angeles, and when I go catch a ball game at SoFi, the parking fee is outrageous, like $55. Well, checkmate, take an Uber, get dropped off, walk a few blocks, and I just save myself time because I don't have to deal with the gridlock of driving in and driving out. There's all kinds of better ways of kind of getting to and from a place. Airport, I don't pay for airport parking anymore. I take an Uber. I used to pay, like, if I would travel for 3 days, I'd have to pay, I don't know, $75, $100 airport parking. Well, now my Uber ride's like $20. Well, I win. Drops me off at the gate, picks me up at the gate or at the curb, and I'm good to go. My car is nice and safe at home. I put fewer miles on my car now than I did 10 years ago, for sure. I used to be 25,000 miles a year driver. Like, I have to push myself to go 5 now. It's just a different way of living, and it's better. So I think the market's going to be big enough, and we can watch it, figure out how can we make money on it. All right, man, I am so close to this market close. This is going to be the first time in my channel's history that I'm streaming from the open to the close. I started the stream right at the open, which is 9:30 Eastern. And we're going to try to close this out. Yeah, thanks, Genetics Mate. Good to see you. Thanks for tuning in. Appreciate it. Thanks for everybody for tuning in. Really appreciate it. Let me come back and cover something. So the newest member of the channel, Tarek, thank you so much. And I wanted to ask you to email me so I can get you all set up, because you signed up as an advanced member. Appreciate it. If you could please email me, and I'm going to put my email in the chat so I can get you set up with all your perks, including access to my research. All the valuations I do, I update once a month. Invite you to the investor calls so we can go over investments, and also invitation to the Discord so you can get hooked up there. Please email me so I can get you all those perks. I really appreciate you joining. Anybody else that's out there that's a member that hasn't emailed me, please email me so I can get you all set up. I want you to get as much value as you possibly can from being a member. I appreciate your support on that. Other than that, I think we're good on stock valuations. We covered a lot of them. Jeez. I think we covered about 20 today. That's what happens when you go a little over 3 hours of streaming. All right. If you guys didn't notice, I stood for the first 2 hours. And then I hit the button on the desk and decided I got to sit down for the last 90 minutes because my legs started to get a little sore. All right. So market, NVIDIA is selling off a little more. Other semiconductor stocks are catching a bid. Intel is up big time. What happened at Intel? Software space is doing nice rise. Staples catching a nice little bid. And Amazon is up. All right. So there's a lot of green, a lot of good, behavior here because we're seeing some stocks that maybe aren't catching much of a bid go up today. Around financials, we're seeing a lot of good action. Citibank is up. Good to see that. JP Morgan's up. Industrials seeing some green. Boeing is up. Okay. Chevron's up. Exxon is up. Energy is up. So I guess the oil prices are up, huh? Let's take a look. So Chevron caught a nice bid. They pay a nice dividend. They haven't been a very good performing stock, but oil prices are up, so Chevron's going to rally. Year to date, this one's up 4%. It pays a 4.5% dividend. Yeah, I'm loving the green as well. Got to admit, this market does not know how to sell off extendedly. Like it sold off a little over 5% starting on October 28th. And then it's pretty much making up most of it now. So we're going higher. And I think the news story that is creating some enthusiasm is that we're likely going to see a rate cut. In fact, let's take a look at Polymarket and see what the odds on Polymarket are for a rate cut. Fed decision. So if we looked at Polymarket a month ago, it was like 91% of participants were saying no rate cut at all. Now we're at 87 and potentially 1% are saying a 50 basis point rate cut. So this really changed fast. So interesting. I'm going to keep this guy. I'll just leave it there. So we're expecting that rate cut. And I think that's what is creating the enthusiasm, the positive sentiment for stocks is we're going to have lower interest rates. It's going to make stock investing more attractive. All right. So it looks like Google is trying to get back to even. I'm good with that. And Meta is still going up. Very good. Walmart, I think it's overpriced, but it's catching a bid today. Oh, I've missed this question here. Would have been my buys recently. So Meta became a really good opportunity. So I bought into Meta, Amazon. Let me look at my portfolio and tell you. So I bought some Reddit recently. There has been a volatility in Reddit, C Limited. But I bought into Meta quickly. I've been buying a lot of Amazon, bought into ASML recently, bought into Taiwan Semiconductor, TSM. I've been buying into Mercado Libre, App11. Uber, I know I bought some shares in Uber recently. I'm buying into eToro. I'm buying some safe stocks like Procter & Gamble and Colgate Palmolive, but those are safe stocks for older investors. Young investors, I don't know that consumer staples are the right one for you. You know, I'd wish good growth stocks on young investors. And I started buying a little bit of Nvidia, not a lot, just a little bit. But I'm not like throwing gobs of capital toward Nvidia. I'm just buying a little bit. All right, so strategy for next year. Thanks, Bo. Yeah, you're right about that. I really do enjoy it. And appreciate you. Man, that's probably number 6 or 7 or 8 of these super chats. I appreciate it. All right, so strategy for next year. What sectors are you looking at? That's a very good question. So let's do the year to date. So this space has done great, and it's been doing great for 3 years. So I'm going to carefully invest in semiconductors, not go overboard. I'm watching software like we covered on this stream. If this begins to work, I'm going to throw gobs of capital into software. Hold my investments in communication services and buy on opportunities like the opportunity presented in Meta. I own quite a bit of financials. Now I'm buying more eToro. I'm buying selectively a stock or two here, but I'm holding because I own so much. If I didn't own in financial services, I would be buying because lower interest rates is like lubricant, more economy, more volumes, more commerce, they make more money. Healthcare, some spots have begun to work. I'm looking for this space potentially work better in 26. Energy can't say that I'm going to invest there because it just depends on oil prices. Buying into a little bit of consumer staples. So the big themes for 26. If healthcare begins to perform, I'm going to put some more capital into healthcare. I already have capital in it. Software space. Monitor it because this could be a next real good pocket of value and appreciation. Financials are going to do great. I've been buying into like insurance through Allstate. You know, I own a lot of Allstate, but I'm going to buy more. I've been buying into eToro here, and I'll hold my positions in communication services. So we are in an expensive market. So I think it's going to go higher in 2026, but where it's going to go higher quickest is what we got to study and then be able to take advantage of that. So I'll be studying it. I think we see some potential opportunity in software, potential opportunity in healthcare, also some industrials. If we get kind of like the core economy going, like I've been buying into UPS, I think that's a good opportunity. 3M and others could really do well. So, and I'll reveal my strategy as I go, on live streams, investor calls. We'll just keep talking about it, seeing what's a good opportunity. Betting, buying into Uber and then ITUB. What's ITUB? So Itaú Unibanco. So these guys do retail banking, wholesale banking, and financial services in Brazil. 77.77 billion. So it's a big entity. Nice dividend, low PE. Looks good. Nice job. Man, it looks beautiful. 5-year. Interesting. Well, why haven't they done better? I guess because the compare. So these guys, if you look at the 5-year, they've had kind of a up and down for 4 years. And then more recently, they've really started to crank up. I'm buying into new holdings down in Brazil. This one looks really good. Good job. Looks like a good stock pick. Good job on getting NVIDIA. And you're going to intern at a semiconductor company. Good luck with that. Well, man, semiconductors are bought pretty extensively. I can't say that there is anything new. Yeah, I think most semiconductor companies are bought and are bid up. The prices are pretty high. They also bought CTO and CTRE. Cool. CTRE has been doing well. With lower interest rates, they're going to do better. So, okay. Nothing wrong with that. And, just continue to improve your skill set, invest in yourself and get good at, finding stocks that are really move the needle. Like recently, like Google, right, doubled in 6 months, or Palantir, Robinhood, NVIDIA. If you can continue to improve your skill set and be able to land a couple of those, it really makes a big difference. And it's really fun. So, all right. So the market is 1 minute from closing. Looks like we're going to end. Wow, look at that. Nice little late rally. All right. Everybody's in a good mood. Everybody had a good meal yesterday, having Thanksgiving. And look at that. Google is in the positive. Look at Meta, 2.26. Go Meta. Nice. Amazon's up nicely. Very good. All right. The market has closed. All right. You guys made it to the end. Thank you. So, yeah. So let me put up the benefit just real quick to answer the question. What are the benefits of becoming a member? There's 4 levels. The simplest is a value investor. So when you come on the live streams and you want me to look at a video or answer, maybe get into a particular question, gladly do it. Your name appears, it's actually highlighted in green. So it makes it easier for me to see where there's a member. So this is $10 a month. Now, if you want access to a lot of member videos, because there are some member videos that I produce for value investors, but I produce most of the videos for advanced investor members. So these are videos that, for example, yesterday I did 5 must-buy stocks that I'm buying right now. And I also do other stocks like best and worst in a particular industry, deep analysis on stocks. Then an advanced member gets you access to those videos. It also gets you access to member calls, the Discord, and I share, when you look at my valuation spreadsheet, and I'll share it with you in a second, you get access to that. I make a copy of it and I provide a shared folder where you would access a working model that I use, the same model that I use, as well as access to the repository of all the valuations that I perform. And I update that once a month. So you can 24/7 go, oh, I wonder what Victor's research revealed on Google, or, whatever stock is on there, Microsoft, Palantir. You can look at it 24/7. So this one here is a pretty popular one. This one's popular. Now, some investors, they pay $100 a month, and the difference being once a month, one-on-one call. I do create super investor videos, and I go over my portfolio, go over my plan to invest in stocks. I really go deep into details on what I'm exactly doing for investors that are interested in this. And then if somebody really wants a lot of research done in a month, maybe a platinum investor level might make sense for them, because I will take 3 stocks and really do research on them and create videos specific. And when you get into every higher level, you get all the perks of the others. So if you're an advanced member, you can come on streams and ask for stocks to be reviewed. If you're a super investor, you get all the perks from advanced, all the perks from value, and you get all these perks. And then platinum, you get everything that's on this page. So that answers your question. Thanks for asking, and thanks for joining the stream. All right, everybody. So that was an awesome stream. Thanks so much. We went long, and that was fun. It's Black Friday. Looks like the market was a good market today. We ended up closing, the Dow was up 0.61, S&P 0.54, NASDAQ was up. The S&P was up, and we look at the heat map, a lot of green. So we are done with November, and we move to December. How can we make money in December? That's the question. So let's dig in and figure that out. I appreciate it, everybody. And I'll be streaming over the weekend. I'm not sure what day, but I'll try to publish it. And then on Monday, I'm back in the morning with Daryl. If you'd like to tune in, love to have you. We'll be doing fundamental analysis and technical analysis. That'll be the first trading day of December. We'll go from there. Probably stream a couple of times in the evening next week. This week was a little funky with Thanksgiving, so I'm sorry to the evening attendees. I'll see when I can stream in the evening, because the evening streams tend to be more educational. And the last one we had was excellent. So thanks to everybody who attended that. And I look forward to the next one. All right. So thanks, everybody. And it's a little late, but happy Thanksgiving. And enjoy the rest of your day. I know I'm going to. And wish you well. Take care.